the Subcommittee on Digital Assets, Financial Technology, and Artificial Intelligence will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. The hearing is titled, A Golden Age of Digital Assets, Charting a Path Forward. Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I now recognize myself for 4 minutes to give an opening statement. Good afternoon and welcome to the first hearing of the House Financial Services, Digital Assets, Financial Technology, and Artificial Intelligence Subcommittee. Today we resume the work of this subcommittee started last Congress under the then leadership of Subcommittee Chairman French Hill. I'm grateful to the now full committee chairman for trusting me to pick up the mantle and continue our legislative work to provide clarity for the digital assets ecosystem. Digital assets present a clear opportunity for the advancement of financial services in the United States. This technology has the potential to modernize our financial infrastructure, enhance the dollar's dominance in global markets, increase the efficiency of payments both domestically and abroad, and provide American businesses and consumers with a faster, cheaper, more transparent way to transact in an increasingly digital economy. Under the Biden administration, we saw regulatory overreach and a pattern of enforcement-driven actions that stifled innovation, especially in the digital assets ecosystem. Instead of working with Congress to establish clear guidelines, the Biden administration opted for an unpredictable and hostile approach that left American entrepreneurs, businesses, and consumers in a state of uncertainty. Agencies took inconsistent, often contradictory actions, pushing innovators offshore and threatening Americans' leadership. This lack of regulatory clarity not only hurt American investment, it also impacted everyday Americans. Let's be clear. The Biden administration's approach opened the door to bad actors and left consumers more vulnerable to fraud. While the EU and UK and even developing economies have advanced regulatory frameworks in digital assets, the United States has fallen behind. Our government's failure to act could mean that the benefit of digital assets and blockchain technology will be realized elsewhere, while American consumers, entrepreneurs, and financial institutions are left navigating an uncertain landscape. Under the Trump administration, we will course correct by creating a workable pathway for responsible digital asset companies to set up operations here in the United States. Encouragingly, several positive steps have already been taken. President Trump issued an executive order on digital assets. The SEC repealed SAB 121. The FDIC has announced that it is reevaluating its supervisory approach to crypto-related activities. And both the SEC and Trump administration have stood up working groups to tackle these challenges. Last Tuesday, the White House's AI crypto czar, David Sachs, joined Chairman Hill, Thompson, Bozeman, and Scott for a press conference where they all agreed that it's time for both regulators and Congress to get this done. Last week, the chairman and I released the Stable Act, a discussion draft to provide a clear regulatory framework for the issues of payment stablecoins. We appreciate the feedback from all relevant stakeholders. The reality is that the status quo for digital assets is untenable. Regulatory and legislative clarity is needed now. Together, we can ensure that stablecoin issuers, digital asset firms, and blockchain developers operate under fair, transparent, and predictable rules in the United States. That means working together, the Trump administration, Congress, regulators, and market participants to craft thoughtful policies that uphold our national security, protect investors, and encourage the responsible development of digital assets in the full ecosystem. Today's witnesses bring a wealth of knowledge and experience on these issues. I look forward to hearing their insights and how we can learn from the mistakes of the past to strike the right balance between innovation and consumer protection. Thank you, and I look forward to your testimonies. The chair now recognizes the ranking member of the subcommittee, the gentleman from Massachusetts, Mr. Lynch, for 4 minutes for an opening statement.
Good afternoon, and thank you, Mr. Chairman. And let me be the first to congratulate you on your selection as chair of this subcommittee. And I do look forward to our partnership this Congress. With the wide subject matter jurisdiction, digital assets, fintech, and artificial intelligence, this committee provides considerable opportunity for collaboration. I also want to thank our witnesses for your willingness to help the committee with its work. The Trump administration and House Republican leadership have clearly demonstrated their eagerness to enact crypto-friendly laws and regulations. As you noted, Mr. Chairman, one of one of President Trump's first executive orders established a digital asset working group that will be comprised of regulators handpicked by the crypto industry. In addition, just days before taking office, President Trump also issued a meme coin to further his own financial interests, so he is all in. The crypto industry spent $119 million in this last election lobbying Congress, and proposals such as a cryptocurrency stockpile and the prohibition of a central bank digital currency speak to the crypto industry's powerful influence. Not surprisingly, House and Senate Republicans have also announced plans to make digital assets a legislative top priority. Nonetheless, cryptocurrencies remain highly volatile and speculative instruments that, if poorly handled, have the potential to destabilize our economy. I continue to have serious concerns about crypto scams, money laundering, and illicit finance uses. In 2023, Americans lost over $5.6 billion to such scams, and illicit addresses received approximately $40.9 billion in cryptocurrency. On the advent of this golden age of crypto, I remind my colleagues of the crypto winter, in which major companies including FTX, BlockFi, and Celsius collapsed, and Sam Bankman-Fried was convicted of massive fraud. Fortunately, because of our robust securities and consumer protection laws, most of the victims of those scams were not U.S. citizens. Similarly, the damage caused by the failures of Silicon Valley and Signature Bank did not spread to our broader financial system. I agree with most of my colleagues that a regulatory regime is needed, but not one that reflects a wish list from industry advocates. As this committee considers legislation to address stablecoins and the market structure, I hope we can have collaborative and bipartisan discussions. We must seek input from law enforcement, the Financial Crimes Enforcement Network, academics, and other experts to ensure robust consumer protection, anti-money laundering, and illicit finance safeguards are in place. I worry that by allowing the digital assets industry to access our banking system, we invite the next financial disaster. I served on this committee during the 2008 financial crisis and watched American taxpayers be forced to bail out major financial institutions that made risky decisions in the name of innovation. The digital assets industry has had years to prove its use cases. Promises of financial inclusion, lower costs, and faster payments are better achieved through public policy solutions. This subcommittee should focus its time on exploring legitimate innovations that have the potential to expand economic access. Last Congress, I was encouraged by the bipartisan approach to exploring artificial intelligence. Through the Working Group on AI, which I co-led alongside Chair Hill, and a roundtable I hosted at MIT with faculty and experts, we found shared policy goals. The emergence of international competitors, such as DeepSeek, demonstrate that we must move quickly to ensure U.S. competitiveness. Additionally, I hope to continue working with my colleagues on fintech policy issues we seem to agree on. These include addressing financial data privacy, expanding data portability, reducing the cost of payments, and encouraging innovation that expands economic access and financial inclusion. Mr. Chairman, I look forward to continuing the important work we began last Congress, and I yield back.
Gentleman yields back. I, too, look forward to working with you, Representative Lynch. I think we have a great opportunity in front of us. The chair now recognizes the ranking member of the full committee, Ms. Waters, for 1 minute.
Thank you very much. While Republicans want to discuss charting a path forward on digital assets, co-presidents Elon Musk and Trump continued their hostile takeover and illegally shut down the Consumer Financial Protection Bureau. I find it somewhat disheartening to hear my colleagues talk about guardrails for stablecoins or digital assets as the agency that has clawed back $21 billion from predatory companies for harm consumers is being dismantled. That being said, I unveiled the fruits of nearly 3 years of work between former Chair McHenry and myself, stablecoin legislation that was jointly drafted by my staff and Chair McHenry's. I believe that this legislation provides the best foundation for moving forward to get a federal framework signed into law. I thank you, and I yield back.
The gentlelady yields back. Today, we welcome the testimony of Mr. Jonathan Yahim, the Deputy General Counsel and Global Head of Policy and Government Relations at Kraken Digital Asset Exchange. Mr. G. Kim, President and Acting CEO at the Crypto Council for Innovation. Mr. Coy Garrison, Partner at the law firm Steptoe. Mr. Jose Fernandez de Ponte, the Senior Vice President and General Manager of Blockchain, Crypto, and Digital Currencies at PayPal. And Mr. Timothy Masid is a Research Fellow and Director of Digital Assets Policy Project at the Kennedy School of Government of Harvard University. We thank each of you for taking your time to be here. Each of you will be recognized for 5 minutes to give an oral presentation of your summary. Without objection, your written statements will be made a part of the record. Mr. Yahim, you are recognized for 5 minutes for oral remarks.
Chairman Steil, Ranking Member Lynch, Committee Ranking Member Waters, thank you for the opportunity to testify today. My name is Jonathan Yahim, and I serve as Global Head of Policy and Government Relations at Kraken. Our business was founded in San Francisco over 13 years ago and has steadily grown into one of the world's largest and most trusted digital asset exchanges. I've served in my current role for over 3 years and spent the prior 15 years in private sector roles based in US and Europe, including over a decade of experience with two of the largest traditional market infrastructure groups. Kraken has invested heavily in supporting effective policy outcomes around the globe. This includes engagement with governments, regulators, and our industry partners across the US, EU, UK, Canada, Australia, and many other developed and emerging markets. Here in Washington, we've continued to support our leaders in Congress in passing foundational market structure legislation necessary to regulate centralized intermediaries and secondary market transactions. Kraken's role in the digital asset ecosystem is diverse. Today, we serve over 15 million customers around the world. We custody over 42 billion in assets on our platform. We have a team of over 2,000 professionals across 60 countries that support the 24/7, 365 global nature of the users and markets that we serve. We advance our mission to expand the adoption of cryptocurrencies in 3 key areas. First, we operate a centralized exchange for crypto markets. We offer a staking program and related products and services. Second, we power traditional market investment allocation into digital assets. This includes derivatives offerings in eligible jurisdictions, the world's leading benchmark provider, which powers a majority of the exchange-traded products that have been approved for trading here in the US and other major markets. We also operate a novel state-chartered bank, which offers institutional custody under an innovative Wyoming legal framework. Third, our on-chain business includes our wallet and layer 2 blockchain called Ink, which serves as a seamless bridge to DeFi for our new frontier of innovative developers and users. Despite the growth in our markets and years of bipartisan work in Congress, the US has fallen behind other jurisdictions in passing fundamental rules for centralized intermediaries. The opportunity and urgency for legislative and regulatory clarity is here. Meaningful progress has been made despite the failed and harmful policy approaches we saw in the last administration, which included regulation by enforcement and downward pressure through the banking system. This slowed or halted responsible growth and deterred investment, job creation, and innovation in the United States. Among many important topics, I'd like to highlight a few key components that are central to effective market structure policy frameworks. First, Congress should grant spot market authority to the CFTC to regulate centralized intermediaries and secondary market transactions in digital commodities. Second, effective disclosure requirements will provide transparency and customer protection. Third, we must avoid blunt application of centralized rulebooks to decentralized protocols that do not have centralized governance systems, infrastructure, or management. Policymakers must continue to evaluate and craft best practices and distinct policy approaches to address DeFi. The leadership from many distinguished members of this committee has proven that good crypto policy is not partisan. Speaking from my own experience the last several years and on behalf of my colleagues at Kraken and around the industry, we are incredibly encouraged to see Congress and the administration now working together towards regulatory clarity. The US must pass rules that are fit for the US markets. but there is often great value in learning from other jurisdictions that have already advanced foundational rules of the road for centralized intermediaries. As we look ahead, U.S. leadership and international cooperation will be necessary to avoid market fragmentation and support the inherently global nature of the digital asset ecosystem. Industry consensus and nonpartisan collaboration is critical for the United States to accelerate towards these goals. We look forward to continuing to support these efforts. Again, I thank you for the invitation and look forward to our discussion.
Thank you, Mr. Yahim. Mr. Kim, you're recognized for 5 minutes.
Thank you, Chairman Steil, Ranking Member Lynch, and members of the subcommittee for the opportunity to testify today on how the United States can best chart its path forward to ensure a golden age for digital assets. I believe that achieving this goal will require a comprehensive federal legislative framework for digital assets. I am pleased to represent the Crypto Council for Innovation, CCI, a global alliance of industry leaders across the digital asset space. CCI is grateful that so many members of Congress recognize the need for U.S. to lead when it comes to digital asset innovation. Under the leadership of this committee, we experienced great bipartisan progress during the 118th Congress. And I respectfully submit that it is critical for Congress to continue such efforts to provide the digital assets industry with the needed clarity to ensure continued growth and leadership in the United States. Over the past 15 years, digital assets have evolved from a topic of curiosity to transforming financial services and how we architect future economic systems. The approvals of spot Bitcoin and Ethereum ETFs, growing retail and institutional participation, and increased adoption of digital assets signal an industry not only meeting its potential, but changing how we live. Indeed, the global digital asset market has seen substantial growth with a market cap that currently exceeds $3 trillion. The stablecoin market alone has grown to over $200 billion, demonstrating the increased use of digital rails for payments. Tokenized assets and new blockchain-based transaction rails can improve financial access and inclusion, reduce counterparty risk, improve operational efficiencies, and lower costs. The industry is working to improve on the legacy financial system and solve for gaps that have harmed historically disadvantaged populations. Against this backdrop, other major jurisdictions have recognized that we are in a race to the top in harnessing and benefiting from this new technology. These jurisdictions are delivering exactly what the U.S. digital assets industry has been requesting: regulatory clarity through a thoughtful, tailored regulatory regime that recognizes the potential of digital assets. To that end, it is imperative that the U.S. build upon the progress made during the 118th Congress and ensure U.S. leadership in digital assets at the global level. Increased clarity regarding regulatory expectations will unleash further innovation and ensure that American markets remain the envy of the world. CCI is encouraged by this administration's early efforts to catalyze further digital asset development in the U.S., including recognizing digital assets as a national priority in the recent executive order. More still needs to be done, however, to unwind the significant damage and uncertainty caused by a regulation by enforcement approach under the prior administration. Unfortunately, during Chairman Gensler's tenure, the SEC brought over 125 enforcement actions related to digital assets, but issued no clear guidance or rulemakings to clarify when an asset is in fact a security. This lack of regulatory clarity has driven companies offshore to jurisdictions with more defined rules and less ambiguity. If a regulatory approach is pushing lawful businesses to move offshore, this must change, and we believe that change has begun. In the interest of time, I will briefly outline the specific steps I view as critical to achieving the golden age of digital assets in the U.S. First, Congress must pass market structure legislation to clarify when a digital asset is a commodity or security and to give clear statutory authority to the CFTC to regulate the spot markets for digital commodities. Legislation should also address risks associated with digital assets markets and technology and provide key consumer protections. Second, Congress should establish a comprehensive framework for the regulation and supervision of stablecoin issuers. Such a bill should also consider rationally integrating effective state-based regulatory models. Accomplishing this would realize the powerful potential of dollar-backed stablecoins in providing individuals with more choice in payments while further solidifying the global role of the US dollar. Finally, Congress and the administration should prioritize supporting the development of decentralization and DeFi technologies. Policymakers should recognize the importance of self-custody solutions and software which enable individuals to securely manage their own digital assets. Congress can unleash digital asset innovation through a forward-leaning legislation. This is the surest way to guarantee that the United States commands the digital asset future while best protecting consumers and fostering economic growth. Thank you so much again for the opportunity to testify, and I look forward to your questions.
Thank you, Mr. Kim. Mr. Garrison, you are now recognized for 5 minutes.
Thank you, Chairman Steil, Ranking Member Lynch, Committee Ranking Member Waters, and members of the subcommittee for inviting me to testify today. My name is Coy Garrison. I'm a partner in Steptoe's blockchain and cryptocurrency practice, where I've advised clients for the last 3 years. Prior to joining Steptoe, I was an attorney at the SEC for about 9 years. I had the honor of serving as counsel to Commissioner Hester Peirce and also serving in multiple roles within the Division of Corporation Finance. I testify here today on my own behalf, not on behalf of the firm or its clients. Congress and this Trump administration have a tremendous opportunity to work together to bring sensible regulation to the digital asset industry. New leadership at federal financial regulators are already beginning to reverse the failed crypto policies of the last 4 years. The SEC in particular has a heavy burden to undo the harmful policy decisions that former Chair Gensler brought, and they have begun the hard but necessary work of rulemaking and providing actionable guidance. However, regulatory actions alone will not be sufficient to stand up a comprehensive regime. Congress needs to fill regulatory gaps by passing legislation for both digital asset market structure and dollar-denominated payment stablecoins. First, I want to underscore that the moment for action is now. The open hostility of the prior administration towards this industry has resulted in a marketplace with no federal regulator, no protections for token holders, and fewer US-based projects. Fortunately, we live in a very different world today. The change at the SEC in particular is a breath of fresh air. Acting Chairman Mark Ueda recently announced the formation of a crypto task force and appointed Commissioner Peirce to lead its efforts. Results were immediate. The SEC rescinded the widely maligned Staff Accounting Bulletin 121. Their work, however, is just beginning and was recently previewed by Commissioner Peirce's announcement of 10 different work streams for the task force. So what can the SEC actually accomplish? I offer the following suggestions, which I believe are consistent with Commissioner Peirce's 10 priorities. First, the SEC should articulate a sound legal interpretation for when digital asset transactions are subject to the securities laws. A clean break is needed from the Gensler era's legal imprecision and sweeping assertion that nearly all digital assets are securities. The interpretation should begin with an acknowledgement that the digital asset itself is not a security. A disciplined transaction-by-transaction analysis must be used to determine whether an investment contract is present because it is required by the case law and should be adhered to by the Commission. Second, the SEC should consider withdrawing Gensler-era litigation alleging unregistered exchange, broker-dealer, and clearing agency activities. As a preliminary matter, it is far from clear that these transactions meet the elements of the Howey test. Even if the new SEC believes that it has jurisdiction over secondary market transactions, consideration should be given to whether beginning a rulemaking process would be a more productive pathway to the registration of covered entities. In an encouraging sign, I note that just yesterday, the SEC and Binance filed a joint motion to stay their litigation for 60 days. Third, the SEC should consider how to better facilitate token offerings in the US by amending existing exemptions and dusting off Commissioner Peirce's token safe harbor proposals. While the SEC can consider these and many other actions, Congress continues to have a vital role in establishing a workable framework. With respect to market structure, I urge the subcommittee to consider the following principles for inclusion in any legislation. The need to establish clear lines between the SEC and the CFTC, and a process to determine which transactions are subject to the different agencies' jurisdictions. Requiring disclosures that are tailored to the needs of digital asset holders. Allowing for disintermediated trading and real-time settlement of digital assets. Imposing similar types of corporate controls and risk management requirements that exist today for securities and derivatives intermediaries, as well as requiring segregation of customer assets and prohibiting the commingling of funds. A second regulatory gap that requires congressional action is the federal oversight of dollar-denominated stablecoins. The discussion draft of the Stable Act provides appropriate protections for consumers and establishes a regulatory framework for the issuance and operation of dollar-denominated payment stablecoins. In conclusion, the timing is right for Congress and the administration to work together to implement much-needed regulatory reform. Thank you for your leadership on this important topic, and I look forward to your questions.
Thank you, Mr. Garrison. Mr. Fernandez de Ponte, you're now recognized for 5 minutes.
Thank you, Chairman Steil, Ranking Member Lynch, Committee Ranking Member Waters, and members of the subcommittee. Thank you for the opportunity to testify today. My name is Jose Fernandez da Ponte, and I serve as Senior Vice President and General Manager of PayPal's blockchain, crypto, and digital currency business. I appreciate the invitation to address the subcommittee regarding PayPal's vision for the future of digital payments. Today, I would like to focus my remarks on how responsible innovation can enhance payments infrastructure and make the digital economy more efficient for all participants. 25 years ago, PayPal embarked on a journey to digitize payments and take them from offline to online. Now, we continue the journey by moving payments online to on-chain. Our customers can today buy, sell, and hold 4 types of commonly used cryptocurrencies: Bitcoin, Bitcoin Cash, Litecoin, and Ether. Our customers can also choose to check out with crypto and use crypto as a payment method with millions of merchants today. In 2023, we launched PayPal USD, or PYUSD, a fully backed, regulated stablecoin issued in the US by Paxos and developed for commerce and payments. Our objective, engaging in the digital asset space and bringing PYUSD to market, is twofold. Leverage the latest innovations to provide a faster, cheaper, stable payment instrument, and ensure that it has utility for mainstream commerce and payments. With PYUSD, consumers are able to conduct faster and cheaper transactions, send money to loved ones, buy goods and services online, and settle those transactions quickly. Businesses of all sizes can use stablecoins to enable cross-border payments, open new markets, and manage their own treasury more effectively. I would like to share 2 specific examples of how our customers are using PYUSD today. The first one is on domestic business-to-business payments. Large enterprises and SMBs rely on PayPal to securely offer fast and low-cost transfers for business-to-business payments. Today, PYUSD is available to them through more than 25 partners. It has been used, among others, by our own venture affiliate, PayPal Ventures, to fund portfolio companies during weekends and outside of banking hours. It has started to be integrated in popular enterprise resource planning systems, and we use it ourselves to conduct payments to some of our vendors today. Second, let me talk about international transfers to businesses and consumers. Stablecoins like PYUSD can enable efficiencies for cross-border payments. International payments incur in significant cost as they move through the corresponding banking network. To address that, we have enabled US customers of our Zoom product to fund millions of dollars of remittances with PYUSD at a lower cost. When a Zoom user chooses PYUSD as a funding instrument, there are no Zoom transfer fees that are incurred. In addition, on the wholesale side, we have enabled several of our disbursement partners to settle directly with us using PYUSD on the back end of transactions, reducing cost and increasing the velocity of those settlements. At every stage of our cryptocurrency journey, beginning with our buy wholesale product, the launch of crypto transfers, and the go-to-market of a stablecoin, we have been deliberate and methodical in our approach, building trust with customers, regulators, and law enforcement at each step. In terms of policy, we believe that predictable market policy is necessary for the crypto industry to grow and thrive in the United States. We recommend several policies that can help make the US a leader in this technology. First, we urge Congress to pass legislation providing stablecoin and markets and trading frameworks for the industry. Second, a state pathway is critical for the continued growth of the industry. State licensing is the approach that most crypto companies have taken, and it leverages the expertise developed over the years by the State of New York Department of Financial Services and others. Third, federal and state charters can work simultaneously under a core set of standards. In both state and federal regimes, the requirements for reserve, asset management, governance, disclosures, and prudential risk management should be fit for the purpose of payments. Finally, any legislation must recognize that the business of payment stablecoin issuance is the business of payments and is not the business of banking, and that payment stablecoins are not securities. In conclusion, the current environment offers an important moment for the US to benefit from a thoughtful and proportionate legislative approach. We look forward to working with you to complete this important task. Thank you.
Thank you. Mr. Masid, you are now recognized for 5 minutes.
Chairman Steil, Ranking Member Lynch, Committee Ranking Member Waters, members of the subcommittee and
Mr.
staff.
Macid, if you could just double check your mic is on. We can hear you, but the live feed may not pick you up.
Is it okay now? Okay. I'm honored to testify before you today. The views I express are my own and do not represent the views of the Harvard Kennedy School. You know, it was in 2014, under my leadership, that the CFTC declared Bitcoin a commodity, and since that time, for over 10 years, I've been calling for strengthening regulation. We hear a lot of calls for clarity, and everybody can be for that, but you know, you can have bad rules that have clarity. We need a regulatory framework that truly encourages responsible development of this technology and not just more of the speculative activity and the abuses that we've seen far too much of to date. I'm going to focus on stablecoins. It's the most useful application of the technology to date, and I applaud the committee for prioritizing that. The Stable Act has many features I support, such as full reserves for tokens, limitations on the activities of an issuer, but there are many areas where it is deficient, and it is substantially weaker than what was negotiated between the former committee chair and the ranking member last fall, which the ranking member introduced yesterday. I want to highlight 5 issues. These are discussed, as well as others, in more detail in my testimony. First, the legislation provides for federal and state chartering, but there is far too much risk of weak state standards and an inadequate review process, and there is no ongoing federal supervision of state issuers. That's a prescription for a mess. We want people to have confidence that any stable coin is truly stable and worth $1, regardless of what state it comes from. We don't want to provide insurance for that, as we do with bank deposits, so we have to do it through sufficient national standards and supervision. Secondly, the legislation does not address the bankruptcy of a stablecoin issuer. If an issuer fails, the standard corporate bankruptcy process would likely apply. That means you've got the automatic stay, holders will not get their money quickly, and the process could take years. And there could be contagion and significant collateral damage. The legislation needs to create a dedicated resolution process that minimizes those risks. Third, I don't think it does enough to address the risks of financial crime and evasion of sanctions. It says issuers are subject to the Bank Secrecy Act. That's a good thing. But the BSA relies on centralized intermediaries. Stablecoins can be transferred and traded without going through a centralized intermediary, and they can be transferred through an intermediary that doesn't even comply with the BSA. So we need to extend the regulatory perimeter and be more creative in tackling these risks. Fourth, you know, the act is a bit like putting the lock on the barn door after the horses have left when you think about the market today, because it's not clear to me it would even have much impact on Tether. The legislation says it's unlawful to issue a stablecoin that isn't chartered, but there's no enforcement mechanism for that and no penalties. It needs to have those and an explicit territoriality provision. And finally, there are simply many ways the Act doesn't give regulators enough authority and discretion, given that this could become a very significant market and it will evolve in ways we can't predict. I want to turn from stablecoins and briefly discuss decentralization and market structure. I'm pleased to see the subcommittee propose that the SEC and the CFTC work together on these issues. I've recommended joint approaches for years now. The challenge with the term decentralization and DeFi is that they're used to describe a lot of things that aren't that decentralized or that still have elements of human control and discretion. So we need to make sure key regulatory objectives like consumer protection are achieved even if in a different manner. Decentralization is also not a good criteria for distinguishing securities from commodities. And for these and other reasons, I'm strongly opposed to the FIT21 Act. It's complex, it will generate more confusion than clarity, and could undermine our capital markets. And you know, it's snowing outside. There's often a lot of snow in this room about this issue, because the notion of security versus commodity, and people say, well, a digital token can never be a security if it's not part of an investment contract. Well, if I have a digital token that represents a share of GM stock, that's a security, regardless of, you know, how it's sold or transferred. So there are better ways to address market regulation. I discussed those in my testimony. Thank you, and I'm happy to take your questions.
Thank you very much. We'll now turn to member questions. The chair recognizes himself for 5 minutes for the purpose of asking questions. Last week during a press conference with Chairman Hill, Thompson, Scott, and Bozeman, the White House's AI and crypto czar David Sachs said the administration is committed to working with Congress on a market structure and stablecoin framework. While financial market regulators have the power to clear up some of the regulatory ambiguity related to the digital asset ecosystem, there's some obvious gaps where no regulator has jurisdiction. I want to start with you, Mr. Garrison. We'll kind of jump around, just a little rapid fire to stage set here. Can you help me describe some of those gaps and explain how the ecosystem's been impacted by them? For example, is the crypto spot market lack a clear federal regulator?
Yes, it does lack.
And is there a regulatory framework for stablecoin and stablecoin issuers?
There is not.
And is DeFi even contemplated by existing law?
It is not.
And the ambiguous legal classification of digital assets, is a security, is a commodity? That's an open question.
Correct.
Okay, so then, Mr. Garrison, in your view, what would be the outcome to the digital asset ecosystem if Congress cannot get these gaps filled? Will companies move offshore to jurisdictions with regulatory certainty or because of possible enforcement actions?
Yes, I think we see that today.
And would you agree with that, Mr. Kim?
Absolutely, Chairman. We're seeing a lot of American businesses moving offshore due to the lack of clarity in the United States.
And you see the same thing, Mr. Yaham?
Absolutely. Regulatory clarity drives investment and growth for businesses like ours.
Would you foresee the U.S. having to import regulatory standards and market practices from other countries if the United States fails to act, Mr. Garrison?
Yes, that is a likely outcome.
And do you think we're already lagging behind in this space today?
Yes, other jurisdictions, including the European Union, United Arab Emirates, and Hong Kong, are further ahead.
And I want to come back to you with there being no standards in the U.S. for some of these crypto companies. Consumers who are trying to vet different projects, different tokens, how is that altering the market with a lack of regulatory clarity in the United States?
There's a lack of consistency in the types of disclosures that are provided and how. There's a lack of consistency in the protections that are provided to persons engaging in digital asset trading.
Let me now jump to you, Mr. Kim, and say, what if we did put in place a framework for stablecoin for the ecosystem to have a regulatory framework governing stablecoin issuances? With those stablecoin ecosystems, can they actually develop with established legacy financial institutions taking part?
Absolutely, Chairman. A comprehensive stablecoin framework will provide certainty and clarity to the industry, allow for U.S. innovation and leadership, and most importantly, protect consumers and investors by giving them various standards and requirements to best protect customers as well.
Mr. Fernandez de Ponte, would you agree with that?
I will. It's a strange circumstance that today the majority of dollar-denominated stablecoins are actually issued outside of the U.S., and there are many jurisdictions that are moving faster in that space. Clarity on the regime in the U.S. would enable American issuers to compete, accelerate financial innovation for the benefit of American businesses and consumers.
And if we provided that regulatory standards for stablecoins, we would be eliminating a major gap in the ecosystem. Is that accurate?
It is, yes.
Okay, so let me continue on. I'm going to come back to you, Mr. Yaham. How do you envision the digital asset ecosystem will change if federal regulatory framework for digital asset market structure were enacted by Congress?
Well, I think in the first instance, it will allow businesses to plan and invest. It will drive consistency. I think it's also important to keep the international landscape in view. Other jurisdictions have moved forward. And I think as we've seen in other financial market reforms, let's take the Dodd-Frank reforms, for example. Jurisdictions moved in different substantive directions on somewhat similar timelines. The most challenging part of those post-2008 crisis reforms were trying to rationalize cross-border market access for large infrastructure players. These turns into bilateral and geopolitical challenges. And I think we have an opportunity here to avoid those. So I think it's very important that the U.S. Puts a leadership seat at the table.
Thank you. In our final 30 seconds, with new technology, people identify potential risk, and I think we see digital asset skeptics claim that the industry is rife with fraud, with abuse. Could you just very briefly comment on how you're monitoring AML and KYC?
So Kraken invests heavily in the personnel, tools, and technology to detect and prevent illicit finance and any illicit finance being conducted on our platform. We create a very strong ecosystem where we not only monitor and KYC check everyone coming into our environment, but in terms of transactions that come in and out and off of our platform, they're subject to sanction screenings and other compliance tools.
Thank you very much. I yield back. I now recognize the gentleman from Massachusetts, Mr. Lynch, also the ranking member of the subcommittee.
Thank you, Mr. Chairman. Mr. Massad, I don't think we should overlook the lessons of the failure of Silicon Valley Bank. In that case, we had a stablecoin issuer who had a huge amount of deposits in a single bank, most of which was uninsured. Just months before the collapse of Silicon Valley Bank and Signature Bank, the Fed, the FDIC, and OCC released joint guidance cautioning banks about the volatility and vulnerability of crypto assets. The everyday American was largely insulated from the fallout of these bank failures, likely because crypto companies, likely because of the risk management systems and heightened capital reserve requirements to insulate most banks, and crypto companies had limited access to the banking sector. I have deep concerns about opening the floodgates for non-bank companies to our payment systems or for Fed accounts. Additionally, allowing crypto companies free rein could put pensions, retirement accounts, and other typically safe investment accounts at risk. The next crypto crash could have disastrous effects on the wider economy. Mr. Massad, what additional risks should this committee consider as it crafts legislation to protect our broader economy and our traditional finance system from the volatility and instability of crypto assets? What safeguards would you recommend, especially with regard to the volatility of crypto to perhaps take down the entire financial industry?
Thank you for the question, Representative Lynch. First of all, I think with respect to the banking system, we certainly don't want banks investing in crypto on the asset side of their balance sheet, meaning, buying crypto or otherwise making investments. I think with respect to other issues like services that are for a fee, like custody or payroll services, I think assuming that we put in a good comprehensive framework on stablecoin issuers so they manage their risks and on crypto trading platforms so they manage their risks, I think those kinds of banking services, can be done. And
having a firewall between the crypto side and traditional?
Absolutely. And, we need to address affiliations and so forth. But, your point on the concentration of deposits, that's why it's not enough for a stablecoin issuer. As, the Stable Act says you can have bank deposits, you can have all these things, but it doesn't have any rules on concentration or, customer concentration. So I'm quite concerned about that. I think this all comes back to looking at this comprehensively and looking at the fact that we really don't have a regulatory framework for a lot of these crypto firms. And we've seen, a lot of fraud and manipulation and problems as a result of that. So I think it has to be done in building blocks. I applaud the committee for starting with stablecoins. I would get that piece done and then turn to the market structure issues, because those are a little more complicated, and I think we'll learn a lot by getting the stablecoin piece done.
What about the contagion piece of this, where you have banks that have access to the discount window, you have FDIC insurance, you've got, and then on the other side of the house, if you've got volatility and instability, you've got sort of co-mingling or association between various crypto companies, so that there's a domino effect that could result.
Yeah.
That actually
There clearly is.
runs into the traditional finance system.
Right. Well, two things. One, that's because of the lack of transparency about this, industry. I mean, sure, the blockchain is transparent in the sense that it's pseudonymous, but you don't know exactly what a lot of the relationships are and who's got exposure. There's a lot of leverage in the crypto industry, and we don't track that. Even in the ETF market, there's a lot
Do
of.
you think there should be a prohibition on government bailouts of crypto firms?
Certainly there should be.
Okay.
But the other thing I would comment on is, with respect to the banking sector, we really don't want banks exposed to the credit of this industry, and that's why I would limit it to sort of services that are fee-based, or taking deposits that are in dollars, as long as again we have some concentration limits.
Thank you, Mr. Chairman. I yield back.
Gentleman yields back. The gentleman from Michigan, Mr. Huizenga, is recognized for 5 minutes.
Thank you, Chairman Steil, and I do just want to extend my congratulations to you as well, becoming chairman of the Digital Assets Subcommittee and having been the former chair of the Capital Markets Subcommittee where a lot of these issues were housed. I know this is complicated and well-deserved, though, on your part, but also congratulations to Chair Hill for seeing that we needed to break this out. I think this is a very positive thing, so I look forward to working with you all. Mr. Garrison, Mr. Yahim, let me start with you. Digital asset market participants have rightfully criticized the lack of predictability and certainty. And going back to 2019, SEC Chair Jay Clayton actually attempted to provide some clarity by releasing a framework for investment contract analysis of digital assets. But we've just seen and just exited the last 4 years where former Chair Gensler famously told crypto firms to come in and register, whatever that meant exactly. They provided very little direction or a way for that to actually happen. Instead, it seemed that firms received was a threat of enforcement for doing so. Is it fair to say that the SEC has thus far not produced desirable or discernible standards for digital asset ecosystem that facilitate consistent application of the rules? Mr. Yahim, Mr. Garrison.
Congressman, thank you for the question. That's absolutely true. There's just been a complete lack of policy making, and it's been a regulation by enforcement regime using a decades-old jurisdictional test to try to shoehorn the diverse set of digital assets in the market into the securities laws.
And let's just be clear, regulation through enforcement is a bad thing, right?
It is a bad thing.
Okay. Sometimes some of my colleagues and friends don't always see it that way. They just think that that's another tool in the toolbox, but that lack of predictability, I would think, would be very harmful.
It's been in stark contrast, Congressman, to, we've watched in many major markets around the world a constructive policymaking process where jurisdictions have crafted definitions, passed legislation, passed regulation. We're in the implementation phase. It has been the exact opposite experience here in the United States.
Yeah, Mr. Garrison, I want you to answer this part. What must be done to ensure consistent guidance regarding the classification of digital assets?
So I think the SEC needs to take a deep breath and start afresh on its guidance. The 2019 guidance that you mentioned, while well-intentioned, has over 60 factors and no way to actually weigh the different factors. That's simply not actionable. There's
I think good news is Acting Chair Ueda is seemingly doing that, taking a very different approach. One of his first was to rescind the Staff Advisory Bulletin 121, SAB 121, followed by the creation of a crypto task force headed by fellow Commissioner Hester Peirce. So additionally, we've seen the SEC pause some of their pending crypto-related enforcement actions, citing a desire for potential resolution. Mr. Kim, beyond these examples, what other actions could the SEC pursue as far as low-hanging fruit to improve its approach in digital asset regulation that Congress could legislate?
Thank you very much for your question. First of all, I want to just reiterate that it's been so encouraging for the industry to have the SEC Crypto Task Force and the new SEC leadership welcoming and willing to work with the industry. In addition to pausing or withdrawing enforcement actions based solely on registration violations without any allegations of fraud or egregious conduct, it's clarifying some of the issues that the industry has been requesting. What is a security? Clarifying and confirming that a stablecoin that is backed one-to-one US dollar denominated is not a security, and just continue to work with industry. The industry wants to work with our regulators to make sure that we can enhance clarity and provide for US leadership.
I've got about a minute left. I want to try to hit a couple of quick things, but Mr. Yahim, In 2023, the SEC went after Kraken's staking program. You operate in over 200 countries, is that correct?
That's correct. Yeah.
Okay, that's a fair number. Being a member of the Foreign Affairs Committee, I know that constitutes much of the known digital world on that. But did any other regulator around the world shut you down as former Chair Gensler did?
No, Congressman, and I think, to put our global operations in context, in those jurisdictions that have advanced clear rules of the road, we've worked with regulators to put those in place, and we are regulatory compliant. There are a lot of jurisdictions that haven't, and markets operate on a verse solicitation basis, but most of our business is across North America and Europe, where we see regulation moving forward.
My time has expired, but I will put a question into you all about whether U.S. lawmakers should be concerned what Europe was first out of the gate with some of their regulations and their framework, and what lessons can the U.S. learn from MiCA. So with that, Mr. Chair, I yield back.
Gentleman yields back. The gentlewoman from California, Ms. Waters, who's also the ranking member of the full committee, is recognized for 5 minutes to ask questions.
Mr. Massad, consumer protections are under attack in this country, and this will have profound consequences for all of our constituents. As Elon Musk and the Trump administration try to delete the CFPB, Republicans on this committee have offered stablecoin legislation that is also light on consumer protections. In the legislation I released, there are robust protections for consumer wallets, including risk management and financial resource requirements to ensure consumers do not lose their payment stablecoins to the scams and fraud that have plagued the crypto industry for far too long. What will it mean for consumers if these protections are stripped away, as Republicans on our committee have suggested?
Well, I think you're exactly right, Congresswoman, that we could see a lot of consumer harm. Today, stablecoins aren't stable because we don't have this framework around them. And it's not enough just to say, okay, you've got to have full reserves for tokens. We do need to go beyond that, and you've noted some of the ways. And also, your point about wallets, I think, is very good. We have to look at this, extend the perimeter here in terms of regulation and look at how these things are transferred. They can be transferred on self-hosted wallets, which raises a lot of issues of evasion of sanctions and financial crime. And unless we really put in a comprehensive framework, we're going to have these problems. I think the bill that, the legislation that you negotiated with the former committee chair does a lot of this. It has stronger federal standards. It has standards that go to wallets. It has a dedicated resolution process. So it has a number of features, I think, that would better ensure protection of consumers.
Thank you. Days before being inaugurated, President Trump followed in the footsteps of his co-president Musk to profit off of meme coins. When Trump launched his own meme coin, I warned the speculative dangers and myriad risk for investors who would be blocked from class action lawsuits if they were swindled. Trump's profiteering also challenges critical national security and anti-corruption laws now. We're seeing reports that after Trump's token crashed, a large number of investors suffered over $2 billion in losses. According to Chainalysis data, $100 million in trading fees have gone to the Trump family and his partners, while pump and dump schemes run rampant with meme coins. It is clear that early traders, Trump's family, and their partners have been the biggest winners at the expense of hundreds of thousands of investors. And so when I heard about this meme coin, I asked, what is it? They said it's not an investment, it's not a contribution to the campaign. It is all about the President of the United States and then his wife and now his children all being involved in creating their own coins and making money. And those who understand what it means to have the rug pulled out from those who are unsuspecting, this appears to have happened. What do you think about this?
I think it's plainly wrong. I mean, I don't think you need to be an expert about crypto to know that. I mean, look, this is like, paying to join a fan club, except it's a digital token that then you trade, and you buy it to trade because you hope that somewhere, someone at some time will pay more for it than you paid. It's clearly contrary to the spirit of the executive order. It's clearly a conflict of interest. It will create ongoing conflicts of interest because companies and countries may now try to buy the coin to curry favor with the administration, and they're going to continue to release additional coins. So, I think it's a black eye for digital assets. It's exactly the kind of behavior we should be trying to tamp down.
Well, just quickly, upon taking office, President Trump signed an executive order banning the creation and issuance of a U.S. central bank digital currency, also known as CBDC. The U.S. is now the only country in the world to impose a presidential ban on CBDC, while China and Europe are free to lead the global competitive landscape. I just get that in there because our central bank, why don't they want our central bank involved?
Well, if I can just add a couple thoughts to that. I mean, look, I know there's a lot of pros and cons about a retail CBDC, but we need the Federal Reserve to continue doing research and development in the area of digital assets. If you want digital assets and tokenization to really grow as a sector, then the federal payments infrastructure must be geared to handle that. And so that's why we need the Federal Reserve to continue to do work in this area. Unfortunately, the executive order suggests it can't.
The gentleman's time has
Sorry,
expired.
thank you.
Thank you very much.
The gentleman's time has expired. The gentleman from Minnesota, Mr. Emmer, is recognized for 5 minutes.
Thank you to you, Chairman Steil, and to Chairman Hill for your tremendous leadership and partnership on digital asset legislation. I am honored to serve as the Vice Chairman of this subcommittee, and I'm humbled by the great work already done by your subcommittee. Under President Trump, promises made are promises kept, and a new day for crypto innovation, opportunity, and excellence has finally arrived. Crypto technology shifts economic power from centralized institutions back into the hands of the people. It's transformational. The wrong leadership, our past administration, feared this transformation. They did everything they could to kill it. The right leadership, the Trump administration, welcomes this transformation and will do everything in their power to make the United States the crypto capital of the world. For this reason, we are in a moment to drive real change, to legally anchor the digital asset community, to unlock a peer-to-peer internet with an abundance of opportunity, to be globally competitive with our regulations, to expand the status of the dollar as the world's reserve currency, and to foster in the golden age of America. Doing this requires leading with two priorities. First, we must ensure crypto policy remains nonpartisan. Republicans and Democrats have a 10-year history of working productively together on solutions in this space. That kind of teamwork must remain the status quo. Second, we must craft statutory regulations that honor the core American values that are enshrined in digital asset technology: privacy, individual sovereignty, and free market competitiveness. I'm encouraged by the strong, nonpartisan coalition of members on this subcommittee and this full committee who have put up American values at the forefront of crypto policymaking. This Congress, I look forward to supporting this subcommittee as its vice chair in drafting and passing stablecoin legislation and market structure legislation. I also look forward to passing the CBDC Anti-Surveillance State Act, which bans the government from ever creating a central bank digital currency, and the Blockchain Regulatory Certainty Act, which gives entrepreneurs the legal clarity they need to innovate right here in the U.S., and the Securities Clarity Act, which codifies in law that a token is separate and distinct from an investment contract. This committee has long been at the forefront of innovative policymaking for the digital asset ecosystem. In this Congress, I'm excited to see the legislative products of our labor pass and get signed into law. Thank you again, Chairman Steil, Chairman Hill, and my colleagues across the aisle for your longstanding partnership in good faith to unlock an abundance of economic opportunity for our constituents. We have a lot of work ahead, but our constituents can trust that a great bipartisan team here in Congress will bring this across the finish line and deliver for the American people. Again, I'm honored to serve as your Vice Chairman, Mr. Steil, and I yield back the balance of my time.
We're honored to have you as our vice chair. We look forward to your participation. The gentleman yields back. The gentleman from Illinois, Mr. Foster, is recognized for 5 minutes.
Thank you, Mr. Chair, and congratulations. And thank you to our witnesses, particularly Mr. Massad. Your testimony is really excellent. I read it twice, and I urge anyone who wants to sort of understand the issues here to have a long read on your testimony. One of the points you made in this is the inadequacy of the current corporate bankruptcy codes for resolving for stablecoin. I was wondering if the other witnesses have any comments on that. Do you view the current bankruptcy code as adequate for resolving failed stablecoins, or do you think we need a separate resolution regime for stablecoin issuers? Anyone who wants to? Just raise your hand if you think the current regime is adequate and we don't need a new one. Just raise your hand. Okay, so it looks like all of you agree that we need some kind of new resolution regime for bankrupt issuers of stablecoins. So that really should be on our to-do list on here. Let's see, Mr. Jackham, you emphasized the regulatory oversight over your platform, but as Mr. Massad points out, that's only half the battle. You know, if you accept crypto assets that have been self-hosted, you must need some mechanism to make sure that they haven't been used for, fentanyl purchases or, or North Korean missiles, all this sort of things that are really, key to have that where. How do you ensure that the crypto assets that you bring on board have not been used for these illicit purposes?
Thank you for the question, Congressman. Kraken employs a zero tolerance policy for illicit finance. And if you think about our ecosystem, there is KYC, there are KYC and AML checks for every user that comes on board.
Just to be specific, let's say you've had Bitcoin that's gone through these washers and transferred to other anonymous currencies, and then it shows up in your platform from a self-hosted wallet. How do you have any idea whether that money's been?
Thank you for the question, Congressman. This is the beauty of blockchain technology, and I think this is where the blockchain analytical tools really power this ability to surveil, detect, and prevent this type of behavior. We employ these tools to ensure that not only all the transactions within our environment and on our platform are subject to these screens, but also onboard, offboard, and if we're interacting with other centralized intermediaries, self-hosted wallets that are owned by our customers, those are subject to sanctions.
That are owned by your customer. Yeah, I'm not worried about your customers, the people you KYC'd. I'm worried about people that are out there on the dark web, trading anonymously with self-hosted wallets to buy fentanyl precursors or all the things that are, killing Americans or the North Korean nuclear missiles that threaten us. So it seems like, or if you have a solution to that actually works, I've been asking for it for 10 years and haven't received it. And so if you could, for the record, say exactly how you can guarantee that when you bring on a crypto asset, that value has not been used in an illicit transaction. If you could answer that for the record, I'd appreciate it, because it's one of the two things that, for one of the reasons why we've actually, over the last 10 or 12 years, passed exactly zero legislation on crypto is that the two fundamental issues are anonymity and finality. So just, for an example on the finality, why that's so tough, if someone comes, if you're self-hosting and someone comes and puts a gun at your head, drags you into an alley, says, get out your cell phone, transfer all your crypto to me, is it your view that you're just screwed and that's it? That money has disappeared into another self-hosted wallet, wandered off to the dark web? Or do you think that we need some way of tracking it down and find out where it went?
Well, Congressman, I think it's really important to put the market into context here. The crypto markets have reached over $3.5 trillion. 85 to 90% of that activity today goes through centralized intermediaries like Kraken and other.
It's the 15% that is threatening us with nuclear missiles we cannot stop from North Korea. All right, I'm not worried about the 85%, and I'm not even, anyway, so if you have a solution.
Well, Congressman, if I may, I think the 85 to 90% is what we're here to talk about today. That is why it is so important for the United States to move forward with market structure regulation. If we can, there are many issues to debate over the next several years, but we need to move now and put that basic foundation in place.
Okay,
like
unless
other major
the 85% is used as an on-ramp for the 15% that's killing Americans. Yeah, Mr. Massad, you look like you wanted to say something.
Well, I was just going to say, you know, when I hear the industry defend it this way, and yet at the same time they want to promote DeFi, so you might say, well, okay, are you willing to somehow restrict DeFi and have everything go through centralized intermediaries so we can have BSA checks?
Thank you. My time's up. Yield back.
The gentleman yields back. The gentleman from Ohio, Mr. Davidson, who's also the chair of the Subcommittee on National Security, Illicit Finance, and International Financial Institutions, is now recognized for 5 minutes.
Thank you, Chairman, for holding today's hearing, A Golden Age of Digital Assets. Given the title, I think I'll get a question in at least on gold-backed stablecoins. But I want to strongly support legislation that provides legal clarity for payment stablecoins. You know, first, traditional stablecoins are priced at $1 per token, and they are backed by custody of $1 of either cash or cash equivalents like U.S. Treasuries. As the name implies, a gold-backed stablecoin is backed by physical custody of gold. Consequently, with a claim to the gold that's on deposit, each token reflects the market price of gold. Similar commodity-backed stablecoins are obviously viable, but why would anyone prefer a stablecoin of any kind to a traditional bank deposit? Well, first, banks have fractional reserves, and although the risk of a bank default is normally small, cases like Silicon Valley Bank exist. Stablecoins are fully reserved, and they have audited balances of 1-to-1. In the case of dollars, it's $1 per dollar, or in the case of something like gold, it'd be 1 ounce per token. The other thing is self-custody. So while the skeptics, keep trying to undermine the market, the whole point is self-custody, permissionless, which is no intermediary, payments. And the idea that you have to go through an intermediary to be trusted basically says that unless the government grants you permission, we just assume you're a criminal, that you're trying to do everything that we want to criminalize. And there is no decentralized finance without the decentralized part. If you don't protect self-custody, you essentially don't have, all you really do is change which intermediaries are involved. You don't really do that much truly interesting work. So I don't think any serious piece of legislation to try to chart a path for a, quote, golden age of digital assets could possibly exclude serious protections for self-custody. And I was really pleased to hear you highlight that, Mr. Kim. So, Mr. Yakum, Kraken lists some advantages of gold-backed stablecoins. You obviously have them available. Do you agree that there are advantages to using a gold-backed stablecoin to other stablecoins?
Thank you for the question, Congressman. And to touch on your prior point, thank you for your leadership in terms of helping others understand the importance of self-custody in the crypto markets. With respect to stablecoins, we believe a robust and healthy and competitive stablecoin market is going to be important. We've seen instances where, you know, the market, either due to regulation or other forces, has been dominated by a couple players. But again, in Europe, let's look to this example. We've seen the emergence, as rules have been put in place, new issuers register and competitive forces at play. And I think that's what we all want for the market. So this includes gold-backed stablecoins. I think there's going to be a lot of innovation in this space, but it's important for the U.S. to put rules in place for issuers. Right now, we see other jurisdictions moving forward, which is requiring every global stablecoin issuer to consider registration in one jurisdiction or another.
Yeah,
And,
I think it's a good point. I mean, I think the big thing the committees try to do, and we had witnesses, including Director Harris from New York, and we've had legal clarity in America for years now. We just haven't made it federal. And so some people want to make it only federal and essentially nuke what's worked successfully with a regulatory regime in New York. And look, New York rarely gets regulatory frameworks right in a way that I will applaud, but this is one that seems to have been pretty effective. A lot of times it seems very heavy-handed, but this seems to have worked. And we've got people that don't want to recognize that and basically want to eliminate the state-backed stablecoin path. You know, one of the other things that we talked about was, you know, legal clarity. One of the first bills I introduced in this space was the Token Taxonomy Act, and it gets at this idea that there has to be a bright line test. I'm going to rapidly run out of time, but Mr. Massad, you know, is there any place that really doesn't look like a Jackson Pollock painting? I mean, that everyone looks at it and says, this is really a bright line test. This is a security, and this is not.
You know, Congressman, thank you for the question. It's very tough, but I think we need to remember that other jurisdictions are struggling with this security versus commodity or security versus something else also. Europe has this too. It's whether it's a crypto asset or a financial instrument. The difference is they have, in some of these other jurisdictions, because this also exists in Hong Kong and other places, they have more unitary regulation, so it's a little bit easier to.
Well, it is the challenge before
Second-
us, and we have to get a bright line. I'm sure others will highlight it. Sadly, my time's expired. and
If
I
I
yield
can
back.
just add, though, on New York, if
The
all
gentleman's-
50
the gentleman's-
states follow
the
New
gentleman's
York,
time has expired. The
I'm
gentleman's
fine with
time
the
has
state
expired. You can enter it for the record. The gentleman's time has expired. The representative from Massachusetts, Ms. Presley, is recognized for 5 minutes.
Thank you to our witnesses for joining us today. There's so much excitement around digital assets, especially cryptocurrency, understandably so. Cryptocurrency is the new thing, it's shiny, it's flashy. People on the internet are always telling stories about how much money they're making on their investments in the latest coin. But the stories that stick with me the most are not on social media posts. They're the ones that I hear in community or that come to my office as casework, like the college student whose digital wallet was drained and they don't know who to turn to for help, or the elder who lost everything when responding to text messages from a number that was pretending to be their grandchild in order to set up a crypto access account. These stories and many more are the heartbreaking reality of crypto scams, and I believe we all, government and industry, should do everything we can to stop them. Mr. Kim, you are the president and acting CEO of Crypto Council for Innovation. Do you think it is important for government to play a role in reducing scamming and fraudulent activity through cryptocurrency?
Thank you very much for your question, Congresswoman. As a general matter, it's extremely important for any counter-illicit activity to be stopped, and CCI is committed to coming up with policy solutions. My opinion is that the best way to accomplish this is through a comprehensive federal framework for both market structure and payment stablecoins to make sure there are consumer disclosures, that there are consumer protection standards, and all of this information can help prevent scam. At CCI, we run different types of educational aware campaigns with our members to make sure these types of scams do not come to be. In the US, centralized exchanges, as my colleague to the right of me mentioned, they are subject to robust AML-CFT oversight, but no amount of counter-illicit activity is acceptable, and CCI is committed to working with you and your office to making sure that we promote awareness and education to best stop consumer scams.
Thank you. My next question is for the entire panel of witnesses. So please raise your hand if you oppose crypto scams and support protecting consumers. Excellent. Let the record reflect that every single witness today raised their hand. I'm glad we can all agree on that, but it's not enough to simply talk about it. We need to be about it. And that's why I want to bring attention to the Consumer Financial Protection Bureau. This small but mighty government agency is one of the top watchdogs fighting hard for working class people and their bank accounts. And that's precisely the reason Elon Musk is trying to kill it. If you're not familiar, the CFPB has put $21 billion, that's with a B, dollars back in people's pockets. And when it comes to digital assets, CFPB collected data from consumers and found that 40% of crypto asset complaints were about fraud and scams. They then use that information to develop resources for consumers and prioritize regulations for crypto firms to reduce predatory behavior. But the agency is now under attack. Elon Musk and his so-called Doge bros have kicked out the employees, locked the door, and stopped all the work from continuing. They did it with the blessing of our scammer and harmer-in-chief, Donald Trump. Earlier this year, Trump launched his own cryptocurrency meme coin. He promoted it on social media and people invested in it, but then it quickly lost value, roughly 40%, when Trump insiders pulled their money for a profit, resulting in working class people stuck with the losses. It was a scam. So let's be clear. On one hand, Donald Trump will steal from people through a crypto scam. On the other hand, the hard-working staff at CFPB will fight to get people their money back. And that's why we need this essential agency to be reopened to finish its necessary work. Mr. Massad, the Consumer Protection Financial Bureau, before it was attacked by Elon Musk and Doge, proposed that crypto payments are subject to the Electronic Fund Transfer Act. Why do you think that is important?
Well, I think, Congresswoman, thank you for the question. I think we have to have a complete framework of regulation, and particularly given the fact that the industry likes to push back against whatever regulator is trying to do something. And to your point about shutting down the CFPB, we cannot build strong financial markets if we're going to sort of regulate by a pendulum swing, sort of go way over here, one administration, then go way over here, the other administration. I mean, reasonable people can disagree with some of their rules, but you don't shut down the agency.
Thank you. I yield back.
The gentlewoman yields back. All members are reminded to refrain from engaging in personalities towards the president. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman Steil, and thank you, Ranking Member Lynch, for holding this hearing, and thank you to our witnesses for taking time to be with us today. One aspect of stablecoins that interests me greatly is their utilization for business-to-business transactions. Mr. DePonte, why are stablecoins a better tool than traditional settlement rails for domestic business-to-business transactions?
Thank you so much for the question. We have been active in the space of crypto for the last 5 years and in the stable coins for the last year and a half. And the reason that we are there is because we are a payments company, not a blockchain company. We see the potential of the technology to bring the next generation of payment rails. And we believe that business-to-business payments is one of the places where we will see that adoption first. In terms of domestic payments, there is a very clear advantage that even in places that have adopted real-time payments in more traditional rails, through transactions with stablecoins on blockchain, businesses can transact outside of banking hours, outside of Monday to Friday, outside of 9 to 5. We see that for many small businesses that we serve, that means that they can get their payments in 2 days earlier. They can get their payments in without waiting for an ACH transfer to settle. We see fundamental advantages in reducing financial costs for those businesses.
Thank you. And recently I had a constituent express a great deal of frustration regarding the cost and difficulty of conducting an international wire transfer to pay an invoice. Mr. DePonte, do you see similar benefits when stable coins are used for international cross-border payments between businesses?
Thank you so much for the question. If there is value on the domestic side, there is even more value on the international side. The cost of sending an international wire is in the range of $50. The time that it takes to settle is in the range of 3 to 5 days, and there might be other costs associated for the receiving party internationally. When we can do transactions that are fast and cheap, and they can settle 24/7, and they can settle in minutes, we are saving those businesses at least in 3 ways. We are putting 5 days of money back on their balance sheet because they don't need to pre-fund the money. In many cases, they can get better exchange rates because they can time when they do the transaction. And they are also reducing the counterparty risk because they don't need to have pre-funded money with their disbursement partners. I have the luxury of being able to engage with our consumers and businesses. And I remember a few weeks ago, I was talking to one of our small businesses, a pottery business out of Texas, who was very clear that the main reason that she was excited about this technology was not the need to reduce the cost of payments, but to grow her business. And she shared that very really, she had to decline a significant order from overseas, from the Middle East, because they could not figure out the way to make the payment. So if we can provide this fast and cheap and 24/7 settlement vehicle, we will be helping her grow her business and millions of other American businesses.
Thank you. I think you shed great light on that. I'd like to shift gears now and discuss the benefits that stablecoins offer to consumers, not just businesses. Mr. Kim, I understand that traditional financial institutions charge 5 to 12% for remittances. How can stablecoins be used to lower those costs for consumers looking to make remittance payments?
Thank you very much for this important question, Congressman. You're absolutely right. Traditional institutions can charge anywhere from 5 to 12% for cross-border remittances. Stablecoins can reduce that to 1% or lower. I'm from New York. In New York, New Yorkers send $10 billion overseas on remittances. We're talking about $500 million that could be spent on the local economy and other good reasons. And this is why it's so important to have a comprehensive federal framework for stablecoins to further spur this innovation and leadership in the United States when it comes to stablecoins, Congressman.
Thank you.
I fear that a lack of strong communication between the CFTC and the Securities and Exchange Commission has been why the Biden-Harris administration was so unsuccessful in appropriately regulating digital assets. Mr. Kim, would you be supportive of a joint advisory commission between the SEC and the CFTC to help harmonize them and resolve the jurisdictional overlap?
Absolutely, Congressman. Interagency collaboration and cooperation is critical to getting this right for the United States. We need clear delineation of responsibilities between two agencies, and this is something that the President's executive order also recognized by establishing the working group. And I want to thank you, Congressman, for your leadership with the Bridge Act as well.
Thank you, and I have full faith that this Congress, we will pass legislation regarding both stablecoins and market structure for digital assets. And as we blaze a path forward, it cannot be done without cooperation and communication between the SEC and the CFTC. Thank you, Mr. Chairman. I yield back.
The gentleman yields back. The representative from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Mr. Chair. I feel we in Congress should neither romanticize nor demonize emerging technologies like blockchain. Like all technologies, blockchain has constructive uses and destructive uses, and I feel like our mission should be to develop a regulatory framework that maximizes the best uses and minimizes the worst uses. Because without a bipartisan agreement, we will continue to have a dangerously deregulated status quo that benefits offshore, over-leveraged, deregulated actors. And for me, a bipartisan agreement would be a fundamental improvement upon the status quo. I want to follow up on Congressman Rose's questions on remittances. I represent the Bronx, which is one of the poorest counties in America. I have constituents who pay exorbitant fees simply to transfer their own money to their loved ones abroad, whether it be Mexico or the Dominican Republic. My first question would be for Mr. Ponte. PayPal is obviously one of the largest payment processors in the world. What is the cost of transferring money via the conventional payment system versus the crypto or stablecoin payment system?
Thank you for the question, Congressman. The cost of sending money overseas varies widely by corridor, but information coming from sources like the World Bank would put the average cost in the range of around 6%, with a target of, I think that the desired target for the World Bank is to bring that down to 3%. But the current average, I think, is in the range of 6%. When you're doing those transactions on stablecoins today, if you're doing that purely from a stablecoin wallet to a stablecoin wallet, depending on the protocol that you're using, it can be as low as 1 cent per transaction in some of the most efficient wallets. That still would not address part of the complexity, because then you would need to explain to the person on the other side, they need to get a crypto wallet, they need to find an exchange, so there is still some friction there. But we are finding experiences that combine fiat and stablecoins for the benefit of the user. For instance,
I just want to simplify it. So the average cost of remittances is 6%. The World Bank has a sustainability development goal of 3%. What is your cost with stablecoin?
When somebody on Zoom, our remittance product, we have enabled stablecoin as a funding instrument. When somebody sends a remittance funded by POUSD, we don't charge any transfer fees. So the transfer fee that is charged to the user is zero. There is still a component on the Forex spread, depending on where that corridor goes.
Okay, so it's zero when it comes to the transaction fees, and then if you factor in the spread for the foreign currency exchange rate, what would it be?
That would vary. I would need to come back to you for follow-up.
Is it less than 3%?
In many cases, it will be less than 3%.
We're living in a time when foreign demand for U.S. stablecoins is on the, foreign demands for U.S. treasuries is on the decline. And it appears to me that stablecoin issuers are becoming the largest purchaser of U.S. treasuries. It would seem to me that the proliferation of stablecoins can dramatically expand the market for U.S. treasuries. What impact would that have on the cost of U.S. debt?
Thank you, Congressman, for the question. U.S. treasuries are definitely being established as one of the assets that are being preferred for reserves of stablecoin, and as the market grows, that will undoubtedly drive demand, especially as American issuers are able to issue more here inside of the U.S. and they're able to ride that increase in the market. I don't have an opinion on what that would make for the cost of debt of the United States, but definitely is one of the aspects where net demand for treasuries could grow.
Or it seems to me economics would dictate that growing demand for U.S. treasuries would lower the cost of U.S. debt. But, Mr. Massad, do you feel stablecoins should be regulated in the same manner as banks?
Well, not quite in the same manner, but with some similar principles, such as some of those in the Stable Act, like full reserves and capital and liquidity requirements, risk management measures, and so forth. I mean, I've been calling for this for years because not just to address the
You would
risks,
concede that, a stablecoin issuer that has no fractionalization of reserves and no
Correct.
lending
Agreed. They're
function is
not creating
qualitatively different from a bank,
they're not creating money.
and
I
therefore
would
should
agree
have
with
its own regulatory framework.
that. Absolutely.
Okay. I see my time is about to expire, so I will leave it at that. Thank you.
The gentleman yields back. The chair now recognizes the chair of the full committee, the gentleman from Arkansas, Mr. Hill.
Thank you, Chairman Steil, and thank you for your leadership of our important work in the 119th Congress on digital assets. Appreciate the questions of my fellow committee members and appreciate all the witnesses being with us today. Mr. Garrison, today's investors make investments in digital asset projects through a series of exemptions that the SEC has crafted, each with their own advantages and limitations. Could you take a minute and discuss the different exemptions that digital asset projects are currently using to raise money with investors and what the principal obstacles are to that process?
Certainly, the primary exemption that most digital asset issuers rely on is Regulation S, which is a safe harbor for offshore transactions to prevent U.S. investors from even participating. So as a starting point, many U.S. investors are just kept out. For those that do issue to U.S. investors, you typically do so through the Regulation D safe harbor, which can only be sold to wealthy investors. So you have to have over $200,000 in income or $1 million net worth to participate in that. In the U.S., there really is no straightforward way to get digital assets out to retail investors in a either registered or exempt offering.
Yeah, so that's helpful to me because this is, what I think the ecosystem has to understand is that not all these needed activities can be taken care of by the commission by itself without Congress. So what would be in your view, the key features of a workable exemption type system that SEC could add to that without Congress?
Certainly. So the SEC could use its exemptive authority to add a new exemption similar to Commissioner Peirce's token safe harbor proposals from a few years ago, for example. So a few features that could be helpful there is the ability to access retail investors, as well as tailored disclosure items for this industry, right? So token holders have different interests than a shareholder in a company. The types of disclosures that are needed are completely different in this situation.
Yeah.
So providing that type of information, and you can pair that with many investor protections, individual limitations on how many people can participate, how much they can participate of their net worth. Many of the same concepts in existing securities law exemptions can be grafted over in a way that makes it a balanced approach.
Thank you. Well, I think we've worked certainly with that concept as we've drafted our FIT 21 bill in the last Congress. Bitcoin clearly is the most popular digital asset in the ecosystem. And it's one example where both the SEC and the CFTC have agreed that it's not a security along with Ether. Do you think under the current securities laws it would be possible for a national securities exchange to list Bitcoin and a security alongside each other? Is that possible, you think, under current?
No, it is not.
Not? You don't believe it is? Mr. Yahim, you agree with that? You think?
I think there, Congressman, thank you for the question. I think there could be exemptions put in place. It's our view that rather than do this piece by piece through exemptive relief or no action, from the agency, it's really important for Congress to set a clear statutory framework and do that across both agencies. We've seen prior examples where markets have dual registrations at the SEC and CFTC. And the fact of the matter is the rest of the developed world and most other emerging jurisdictions have just called these crypto assets. And you have one regulator, one registration framework, and we have to work within our unique legal system, but I think in order for our framework to be durable and keep pace with the innovation, the tests and the jurisdictional lines need to be clear and simple.
Mr. Garrison, you agree with that?
Yes, there's without a doubt a need for clear jurisdictional lines and clarity.
You've advocated for a joint SRO to oversee digital assets as a convenient way to sort of sidestep these questions. Still advocating for that? Mr. Garrison?
I'm sorry, clarification for a joint SRO to oversee SEC and CFTC trading?
Yeah.
Yeah, I think that could potentially work great. Any type of communication between the two agencies and coordination on regulations would make sense.
My time's expired, Mr. Chairman. I yield back.
Gentleman yields back. The representative from Texas, Ms. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to all the witnesses. I want to do some follow-up to the questions that Mr. Torres was asking with you, Mr. Da Ponte. The crypto industry has always boasted about the easier access and the savings of using crypto or stable coins in lieu of remittances, and they talk about all these prices, but the reality is, do we have that many migrants using crypto or stable coins to transmit remittances?
There are thank you for the question so much. The use of remittances, the use of stable coins broadly for remittances or for other type of payments is still on the early stages. The vast majority of the use case for stablecoins today, where stablecoins have been adopted, is mostly on crypto and trading markets. We see some early stages in which both consumers and businesses are using that for cross-border P2P, for cross-border P2P payments or for business-to-business payments, but it's still in very early
What percent of remittances today do you think are used or are being transmitted with crypto or stable coins?
I don't have data for that, but my best estimate would be that it's going to be in the low single digits. It's still a very small amount.
It's very small, right? Because frankly, at least when I still remember the first hearing we had on this topic, and I questioned the witness at the time, and he too could not give me a single instant where it's said and done, because it's a practical matter. Yes, it may be easier to transmit, but the receiving party has to have the capacity to receive it. It's not something you can just go to the market and buy your milk. Likewise, do you have any data on the breakdown by income of the buyer, customer, consumer, the investor that does use stablecoin or does invest in stablecoin or crypto?
I don't know that we have that data, but I can consult with our team.
Well, again, it's a question that I've been asking now, it seems like for 5 years, and no one seems to be able to answer that question. Even some of these working groups that are put together and experts come, and you all like to talk about how inclusive this can be and that this will help the unbanked, and it's laudable goals. But the reality is, unless you're really very rich, you're not doing any of this. And the average American just seems to be overwhelmed with this discussion that they don't really even understand what we're talking about. That I think it's going to be really hard for us to get past some of those hurdles. And when you talk about the underbanked, those with limited English proficiency, I think there's a lot of dubious people about what this really means. We know cash. Cash is king. And we really don't want, at least in my district, anybody competing with the US dollar. And I think there's a big hurdle here that we have to use, but we also got to make sure that whatever we're doing, that we do have a framework to protect the consumer, and that we can make sure that they also have a remedies for justice if they get scammed, as Ms. Presley mentioned. So, Mr. Massey, do you think the government-wide mandate to eliminate diversity, equity, and inclusion efforts will change the crypto industry in the long run?
That's a good question, Congresswoman. I'm sure it will. I think it's very unfortunate to eliminate these programs entirely, even if you can find examples of how they've been used that you think are an overreach. The notion that we should eliminate these things, I think, is not good policy. Again,
Well, it's part of the branding of this industry from the beginning. And as I said, we'll be there for the unbanked, for the poor person, to send a remittance for everybody. We'll include everybody. We're not going to be like the banks.
Well, no, I agree with you that the industry likes to talk about inclusion. I don't think we've seen that much of that. And to your question about stablecoins, who's using them for remittances and so forth, we might see that use case develop. The fact is stablecoins are mostly used today for trading crypto. Now, if we had a regulatory framework with sufficient protections that people could have confidence that a stablecoin was really worth $1, then we might see people use remittances. And I agree with Mr. Delaponte that the cost of remittances is very, very high, and we should be looking for ways to bring it down. There are other companies trying to bring it down through non-blockchain technologies, and they're making progress in that regard.
Thank you. I yield back.
The gentlewoman yields back. The gentleman from South Carolina, Mr. Timmons, is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank the witnesses for being with us today. Over the past 4 years, under the Biden administration and Chair Gensler, innovation within the digital asset sector has been driven out of the United States. Numerous groundbreaking blockchain companies with potential to transform our economy have relocated to jurisdictions with well-established regulatory frameworks. Meanwhile, international competitors have gained a distinct competitive advantage, while American businesses in this space were essentially dismissed by the administration with the message to simply go away. Mr. Fernandez-Duponte, as an American company, how has PayPal's digital currency business been affected by the absence of regulatory certainty over the past several years?
Thank you so much for the question. We have been in industry, we have been in the payments industry for 25 years, and we have been, we are regulated in many, many jurisdictions, and we take that regulation very seriously. So when we decided that we were going to enter the space, we went to the highest regulatory standards that we could go. We obtained the first provisional bid license in New York. We obtained the first upgrade for a full bid licensing in New York. And we obtain a limited purpose trust charter out of New York as well. So we have gone the state route in the place in which the regulation was available to us and where we could interact with the system. Definitely, there are constraints on how products are designed that derive from that lack of clarity and that lack of understanding of when one specific token would be considered a security or not. We support a very small number of tokens in our platform, and are mainly driven by utility.
Quick follow-up question. How could clear legal guidelines for digital assets and blockchain technology help non-bank entities like PayPal compete more effectively on the global stage?
We believe that as the world moves to the next generation of payment rails, it is incredibly important for a payment company like us to be involved. As the world moves toward mobile money wallets internationally and toward networks that will interoperate in each other, we see an increasing volume that is going into those rails, and we need to have an ability to compete in that international market because it is happening outside of the U.S. before it's happening in the U.S.
Thank you for that. Mr. Yahem, how about for Kraken? What would your answer be? How would clear legal guidelines help assist competitiveness of the U.S. economy?
Thank you for the question, Congressman. The clarity needed and provided by the legislation that's advanced over multiple congressional cycles, I think, would solve for a key foundational piece of this puzzle, which is regulation for centralized intermediaries. That will allow investment and growth. Now, if you look at the trend that's happened here, both at the level of the project development teams and the innovators, through to the investing community, and then to the centralized markets, we have lacked that clarity in the United States, which has pushed innovation and pushed development offshore. And it's not just the legal bills. It is the distraction of management and board and our businesses to think proactively about investing. So we're very excited for the change in tone and the cooperation, and we think that's going to drive new innovation here in the U.S.
Thank you for that. I can assure you help is on the way. Last Congress, I introduced the New Frontier and Technology Act with my colleague from New York, Mr. Torres. The aim of that bill is to provide clear definitions within the expanding and often ambiguous digital assets regulatory landscape. As you may note, non-fungible token creators and marketplaces have faced challenges for years due to unclear regulations, while countries like Japan, Singapore, and South Korea have created favorable conditions that have allowed NFT companies to thrive. I was encouraged to see a discussion draft of my bill included in today's hearing, and I look forward to advancing this important work later in this Congress. Mr. Kim, can you describe some of the regulatory ambiguity regarding the treatment of NFTs and explain why these assets need to be approached in a different manner than, say, Bitcoin or Ethereum?
Absolutely. Thank you for your question, Congressman. It's important to clarify the non-security status for NFTs, such as artwork, collectibles, and non-financial applications. Imagine an artist looking to hire a securities attorney, apologies to my colleague to the left of me, before selling this art piece. And this is why your bill is so important. Thank you to you and Congressman Torres for your leadership there to clarify this important issue.
Thank you for that. I'm particularly interested to see how NFTs can revolutionize various sectors, but particularly real estate. I think that there's a lot of efficiencies long-term that we can use the blockchain, and this legislation would help go a long way in that endeavor. Congress has an obligation to make sure the U.S. economy is the best place in the world to start and build a business, and that's what we're working on in this subcommittee, and I'm optimistic we'll get it done this Congress. Thank you. I yield back.
Gentleman yields back. The representative from California, Mr. Liccardo, is recognized for 5 minutes. Maybe you're able to pull the mic over
here.
here.
Thank you. My mistake. Wrong button. Thank you. And thank you, Mr. Chairman. Congratulations as well. I appreciate the testimony of the witnesses. Thank you all for being here. And I hope that we do move a stablecoin bill out with some bipartisan support. And I appreciate the hard work that's been done on all sides. And I also particularly appreciate our ranking member's work late last year to try to achieve a compromise, which I think was a good bill. I am interested, and perhaps I'll start with you, Mr. Fernandez de Ponte, since your company is a well-known national brand, even to those who are not familiar with crypto, and you happen to be headquartered in a great American city of San Jose. I wanted to ask, given the focus that you have and your company has on having a stable payment system, in your testimony you wrote on page 5 that regular and predictable market policy is necessary for the crypto industry to grow and thrive, and that's certainly understandable. And you clearly support state regulation, an option for state regulation. But I noticed that you also encouraged that there be uniform standards, for example, around reserve requirements, around risk management, governance. So then, do you share the concern that Mr. Mossad has that there ought to be some federal regulation or oversight over what the standards ought to be if we're going to have state-chartered stablecoin?
Thank you, Congressman, and thank you for your leadership in our home city, and it's a great city indeed, San Jose. Yes, we advocate for the need for legislation, and we advocate for a state path. The reason that we advocate for a state path is that when we look at it from our perspective, we're a payments company, and payments are regulated at the state level. And we strongly believe that fully backed, fiat-backed, one-to-one reserve stablecoins are, and issuance of those payment stablecoins is the business of payments, not the business of banking, no fractional reserve, all the points that were made here. So we do believe that it is important to maintain a state path. I think that the point on standards is that a state path can coexist with a federal path. We see the advantages of having a federal path as well. We do believe that there should be that general set of standards. That is important that we have equiparable standards in terms of reserve management between any federal path and any state path. We also believe that it's important to not have a duplicity of regulation. So this idea that they can coexist and share common standards, we think is an important one.
Thank you very much. Mr. Joachim, do you also agree that there ought to be some baseline standards set, even if there's a state charter, the stablecoin?
Absolutely, Congressman. Thank you for the question. I think, if you look in the stablecoin space, again, with the goal of encouraging a healthy, vibrant, competitive stablecoin market, both state and federal pathways are important, and there should be minimum standards set. I think, from our standpoint as a centralized intermediary, it's slightly different. And if you look at how markets are regulated in traditional markets, whether it's derivatives or equities, a unified federal framework is essential. Today we operate with over 40 state money transmission licenses. There are only a handful of states that have put in place crypto-focused regulations for centralized intermediaries. So we believe it's imperative to advance and finalize as soon as possible the market structure bill, which puts a clear federal framework in place for exchanges like us.
And then going to Mr. Massad's concerns about, on the Stable Act, about extraterritorial enforcement, shouldn't we give the Attorney General the authority to enforce and explicitly ensure there's extraterritorial application? Since we clearly have many of these entities are abroad. Mr. Joachim?
Well, I think it's important, first and foremost, to get a stablecoin bill done. In terms of the cooperation and international cooperation with other jurisdictions, I think that's the most important first step. We've seen stablecoin rules finalized in the European Union. And we've seen the results of those stablecoin rules now go into effect. In fact, those stablecoins that have not taken steps to register as issuers and bring themselves within the regulatory perimeter are being delisted from major exchanges. And I think, again, that is just a case in point of why it's so important to move this forward as quickly as possible.
Thank you. I yield.
Gentleman yields back. The representative from Indiana, Mr. Stutzman, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to the panel for being here today. I think this has been a very informative hearing, and one that obviously I'm excited about the future, and obviously a lot is happening. I served 8 years ago, and I remember when this committee had its first hearing on cryptocurrency back in 2014, and Mr. Heisinger was the chairman of the committee. Well, fast forward to 2025, and this House has taken substantial steps regarding a federal framework for how digital assets can be incorporated into our financial ecosystem. Despite the substantial work my colleagues have done on market structure, we saw an administration over the last 4 years that chose regulation by enforcement over permanent statute. The Biden administration engaged in all-out assault on digital asset firms, token issuers, and blockchain developers. Furthermore, the SEC and the CFTC were in a turf war over their jurisdictions over these tokens, and it's my understanding that there was a lot of confusion that resulted in a lack of unity and regulation by enforcement, which harmed emerging technologies and U.S. supremacy in digital asset technology. So while the confusion, since the Trump administration, thankfully, has taken over, Commissioner Pierce has unveiled a 10-point action plan for the SEC's new crypto task force. And I would just share with my colleagues on the other side of the aisle that it's a really good read, and I would encourage you all to read it. One of the points that the commissioner makes is where Congress has directed the commission to impose requirements on market participants, SEC rules will not let you do whatever you want, whenever you want, however you want. Some of these rules will impose cost and others compliance burdens that some may find irritating, and the commission will use its enforcement tools when necessary to pursue noncompliance. It goes on to talk about the direction that he's going, and then of course list off 10 different directives or plans of action. And Mr. Garrison, and I would offer to anybody else if they would like, if you could briefly summarize some of the most important points in the action plan and explain some of the impact that you think that they will have on digital assets if they're accomplished.
Certainly. So the first two priorities, I think, are incredibly important. The first is clarifying the status of digital assets under the securities laws, as well as the second, scoping out activities that are outside the scope of the federal securities laws. And I think that really is the foundational question that the SEC has to tackle, creating a very clear interpretation of how the SEC views when a digital asset that is sold pursuant to an investment contract fits under the securities laws. Everything else flows from that. Another maybe bucket, I would say, for the 10 priorities is writing rules and providing guidance on how regulated intermediaries by the SEC can touch digital assets. Now, that would apply both in the context of digital assets that are not securities, as well as digital assets that are securities, like a tokenized stock. Providing a clear pathway for broker-dealers, investment advisors, clearing agencies, transfer agents to be able to engage will really allow the ecosystem to flourish, will allow it to do so under a regulated way and in a way that is compliant and safe.
Anybody else like to comment quickly? Okay.
If I could, I think it's a very thoughtful plan. I have great respect for Commissioner Peirce and Acting Chair Ueda. And I think given that and given the legislation that you all have noticed to create a joint committee, I would urge you to let the commissions work on this for a while and get stablecoin legislation in place. Let's learn from that, but not rush on market structure, because I think we could easily screw things up through the market structure legislation more than help.
Thank you. I've got 45 seconds. Anybody else want to comment?
Yeah, just very briefly, Congressman. I think, again, at the risk of repeating myself, this just reflects the new SEC leadership and administration, which wants to work with industry, which is extremely encouraging. And I think it was Mr. Garrison's written testimony where he had a great line, which said, the industry is not looking for special treatment, just fair treatment. So we look forward to working with the task force on next steps.
Okay.
Congressman, if I may add, one subject that hasn't been mentioned is clarity around staking, which Commissioner Peirce does outline in that plan. We think it is a very important part of the ecosystem. It's a lesser known component, but it is unique to the crypto ecosystem. So it's something we're looking forward to getting regulatory clarity here in the United States.
My time's expired, but I would be curious, at some point, somehow, just some specific elements from successful regulatory frameworks that other jurisdictions have, what you all would recommend would be something that we keep in mind. So thank you. I yield back.
Gentleman yields back. The gentleman from California, Mr. Sherman, is recognized for 5 minutes.
The ranking member made it, I think, demonstrated how the Trump coin was pumped up to $75 and now dumped down to $17, and chiefly was owned by 40 wallets, could be only one family, could be the Trump family. It's called the Trump coin. But I want to focus on Dogecoin. On November 5th, everybody knew that election was going to be good for crypto. And Bitcoin went up 22%. One coin, Dogecoin, went up in 1 week 6 times as fast as Bitcoin. And then, after 1 week, they named a big-time department after the coin. And the coin still uses the dog as its emblem. So somebody knew for a week that as long as Trump had been elected, there would be this new entity called Doge, and that would popularize the coin, drive its price up. Now, I don't know who would have known that this new commission would be called Doge. I don't know whether Mr. Musk or Mr. Trump knew, but they did give it the name exactly 1 week after the election. Mr. Massad, assuming that Dogecoin isn't a security, is it subject to insider trading laws?
No, it is not.
So by arguing that it's not a security, you can engage in knowing a week in advance that it's going to be popularized through a government action, creating a well-known and very popular commission, trade on that, make a lot of money, and they say that Musk isn't smart. I'll point out that Trump used to, has just recently threatened the BRICS countries if they dare try to compete with the U.S. dollar while favoring the crypto bros who have announced that the purpose is competing with the U.S. dollar, all while trying to pass laws preventing a central bank digital currency because that will allow the dollar to compete with crypto. but I want to focus a little bit on stablecoin. Most stablecoins are tied to the U.S. dollar. So say we're thinking about one of those. Now, so the question is, how's a stablecoin different from a money market mutual fund? Now, it's cooler because it's called a coin. And being a cool thing, it can dream of a functionality it doesn't have, just as my Ford Fusion is dreaming of self-driving. But in terms of current functionality and putting aside just how cool it is to tell people you don't have a money market fund, you got a Bitcoin, you've got a stablecoin, what does a stablecoin tied to the U.S. dollar offer the investor that old-fashioned, boring mutual funds, the money market funds don't offer?
Well, thank you for the question, Congressman. I think the way I think about stablecoins is they should not be an investment vehicle. They should not pay interest. And
not even the little bit of interest I get on my money market
not to start out with. I think we're better off,
so it's
restricting
worse
them.
than a money market fund. My money market fund is absolutely stable, strongly regulated, and pays little interest. And you're talking about a stable coin that may or may not be stable and would pay no interest at all. So what's the advantage that it has, assuming I'm not trying to avoid the anti-money laundering statutes, assuming I'm not a tax evader, I'm not hiding money from my spouse? What advantage does it have?
I think it's the potential that the technology does provide certain cost savings in terms of how these can be moved.
But why invest in it now? That's like
But
buying
again,
a Fusion
I don't
thing.
view it as an investment, Congressman. I don't want it to be an investment.
So why would
I want it to be a
anybody
payment mechanism.
why would anybody buy a stable coin, which today is a worse payment system for any honest person, on the theory that someday in the future it may have a greater functionality than it has today? Why would anybody own a stable coin now, assuming they're not a drug dealer, a terrorist, or a tax evader?
Congressman, I think the question is, if we create a framework that addresses the risks, will stablecoins become a means of payment generally used? That question isn't clear yet.
The money market mutual fund already is.
Well, no, that's an investment in my mind. It's not.
Well,
I don't use that to pay for my coffee.
I'm sure I could find a money market fund that pays zero interest if I hated the concept of the world investment.
But I'm not. But there's a transfer agent. There's lots of reasons why I don't use a money market fund to go buy a pair of jeans or pay for dinner. A stable coin.
You certainly can't use a stable coin to do that. I'd assert that we're creating a stable coin to facilitate those who are trying to hide assets, and I'll yield back.
Does the gentleman yield back? Gentleman yields back. The gentleman from Florida, Mr. Donalds, is recognized for 5 minutes.
Thank you, Chairman. That was a very interesting dialogue. My statement is not to be disrespectful. It's to be factual about where we're going. I think based upon the previous conversation, the question could be, why did they decide to make calculators when an abacus can do? That's just simply because technology is taking us to a place where it's far more functional. You could do so many other things. It's far more interactive. It's far more user-friendly, and it actually speaks to the experience that people are choosing to operate in, and no difference with how you choose to do calculations or how you choose to exchange, whether it's a currency, a stable coin, a cryptocurrency, et cetera. It's really the medium of holding value and or exchange that people choose to engage in. And obviously with where people are going, not just in the United States, but in the world, stable coins and crypto and blockchain technology are not going away. They are the modes of storing value and or transacting into the future. And so it would behoove us in Congress to make sure that we have a framework that allows for the proliferation of what human beings, especially Americans, choose to want to invest in and want to do going forward. That said, Mr. Fernandez da Ponte, the US dollar is the asset that basically underlies 98% of transactions in stable coins. As stable coin use flourishes in countries around the globe, so does the US dollar. Would you describe the role that stable coins play in supporting US dollar dominance, particularly given the current global landscape?
Thank you for the question, Congressman. The role of the US dollar as a global reserve currency is a fundamental strength of the US economy, and I don't think that we should take it for granted if this technology ends up generating that next generation of payment rails. As you said, the vast majority of stablecoins today are denominated in US dollars. I don't think that we should take that for granted. The reason for that is because the preeminent use case today is crypto trading, and the crypto trading markets are denominated against the US dollar. As these stablecoins make their way into mainstream commerce and payments, I do believe that we will see the appearance of stablecoins that are denominated in other currencies. Therefore, it's very important that stablecoins that are denominated in US dollars and issued in the US are able to compete with those stablecoins that are going to emerge outside. And also, I think that it is important that we have a situation in which not the vast majority of those dollar-denominated assets are issued by companies outside of the US and sometimes maybe backed by reserves that are not dollar-denominated either. We think that a clear framework for the stablecoin issuers in the US will contribute to maintaining the US position and the US dollar position externally within with a strong competition driven by American companies.
All right. Thank you for that. Mr. Garrison, as we consider legislation to provide regulatory clarity to the digital assets industry, what role could self-regulation play in the larger market structure?
I think self-regulation is an important layer of the overall sector, right? I think we see that in the financial services world, and it works as a good model. Self-regulatory organizations have existed in the securities context since the beginning of our framework. We currently have FINRA. I mean, even the National Securities Exchange System is a group of each one a self-regulatory organization. So you see that on the derivative side as well with the NFA, and there's absolutely no reason why porting that concept over into the digital asset space would not make sense.
Okay, thank you for that. And lastly, Mr. Yahim, quick question for you. This kind of doubles back to the U.S. financial system's dominance. What's your view in terms of stable coins really being an additive towards not just U.S. market dominance, but also U.S. dollar dominance on the world stage?
Yeah, thank you for the question, Congressman. There's a wide variety of use cases that have been proven out, some that have not yet been proven out. It's very clear that stable coins are going to improve efficiency in cross-border remittance, and I think we've heard that from the panel today. It's going to be really important that the U.S. leads in terms of putting rules in place. Other jurisdictions have done this, not just for stable coins, but for centralized markets. They go hand in hand. If you look at the top 4% of assets on our platform, it represents over 60% of the volume, right? And 2 of those are stable coins. If you look at the top 10%, right, that represents almost 80 to 90%. So again, let's focus on passing rules for the most important pieces of the market today.
Thank you, gentlemen. Thank you, Chairman. I yield back.
Gentleman yields back. The gentleman from Illinois, Mr. Casson, is recognized for 5 minutes.
Thank you. Thank you all for staying here so late. There's been a lot of conversation about this, the serious end of crypto, stable coins. I'm going to focus on the silly end, the meme coins. It's funny, we have all these rules of decorum, and it is hard to talk about meme coins with the language that the industry uses to talk about them. I see you all smiling. We'll refer to them as fecal coins for the purpose of this hearing. Is it safe to say from your smiles that you generally share the view of the industry that this is not something that has any innate value, these meme coins?
Yes.
Yes. All right. Have any of you invested in, and again, this starts to get a little bit colorful language, the Hawk Tuah Girls coin? Have any of you invested in that? No? Okay.
They're fan clubs is really what they are.
Yeah, and I say that to raise a more serious point that, as several of my colleagues have noted, the President of the United States issued something that has no innate value. It doesn't have the value that maybe a Bible or a pair of sneakers or a steak or a bottle of water has. It has no innate value. It hit, I think, $75 at its peak the day before the inauguration on the 19th. Anybody know what it's trading at today?
It's a lot less, but I haven't checked. It was like
just under $16 when I was just checking here a moment ago. But like the Hawk Tuah Girl coin, it's really volatile. You know, you boost your Q score and it bounces up, and then people realize they're holding something worthless. The rise in value when it popped up, according to Chainalysis, so that it appeared to include a significant profit to Chinese traders. that 50th of the largest investors in the coin have made profits in excess of $10 million each, and the crash in the coin's price has caused more than 800,000 wallets to lose $2 billion combined. Now, as I understand the work that Chainalysis does, they don't capture any off-chain transactions. So, stuff happening at Kraken or otherwise. So, Mr. Yakum, is it reasonable to assume that the $2 billion in on-chain transactions is much less than the total loss that's actually been experienced from meme coin investors?
Well, Congressman, thank you for the question. I can't speak to the specifics of on-chain versus off-chain. I know for our markets, again, we have
but I'm just making the point that like the Chainalysis reports, they're tracking on-chain trades, right? And so we know, I mean, there's been like National Bureau of Economic Research that said that for Bitcoin, maybe 10 times the volume is off-chain. So if we know it's 2 billion on-chain and there's all this off-chain volume, safe to assume that the total losses are more than 2 billion, right?
Potentially, Congressman. I think, when it comes back to your question of the role, the value.
Well,
I think value is in the eye of the beholder, and a lot of these are sentiment-driven assets. Right?
Fine. Doesn't have any value. Now, I think there's a lot of conversation we can get into about what's the net worth, and obviously, the Trump family and the entities they control has gained a lot on this. But because we still have rules that commingle brokers and issuers and dealers, the reports are that, and again, according to Chainalysis, is that entities that the Trump family controls has made perhaps $100 million on trading fees for these coins, setting aside what the value of the coin is. And again, that's just based on the on-chain transactions that they track. Mr. Massad, you say you've got a comment there. I'm assuming that you would agree with me that Trump family has probably made more than $100 billion in broker's fees. We just can't track it.
We cannot track it, but Congressman, you're raising so many good points. And the thing about these are that, the industry talks about securities versus commodities distinctions. If I were at the CFTC today, and someone came, or 2014, someone came to me with the Dogecoin instead of Bitcoin, I wouldn't have declared that a commodity. Okay, it shouldn't be traded as a commodity. It shouldn't be regulated by the CFTC, maybe by the CFPB, but that's the kind of speculative stuff.
There's rich investor protection here, but I'm running out of time.
Yeah, we need it.
I want to get to another point. If you have something that's hard to track, that has no innate value, that doesn't require you to give something like a sneaker or a Bible in exchange for goods and services, isn't this just a way to transfer money to people? And if we know that foreign governments are participating in these markets, isn't this a violation of the emoluments clause of the Constitution? Now, I know we've had conversations about engaging in personalities. This is not partisan. This is a question of, do we in Congress think that the Constitution is worth defending? And if the President of the United States is putting out something that has no innate value and is getting foreign entities to pay him for it, isn't that a direct violation of the emoluments clause? And if we are taking our oath to defend the Constitution, shouldn't we care about that? Yield back.
The gentleman yields back. The gentleman from Iowa, Mr. Nunn, is recognized for 5 minutes.
Well, thank you, Chairman Steil, for convening this very exciting and important discussion on where we're going. This is something that is going to change the landscape of the country, not just in the next years to come, but in the months ahead. As a member of both the Financial Services Committee and the Ag Committee, we have dual jurisdiction here, one that we've talked about before between both the commodities and the securities place. However, after this past election, I believe we've turned a page here, and I can't emphasize how different the atmosphere in D.C. feels, particularly when it comes to our transitioning back from an SEC chair who claimed jurisdiction over every single token out there, except for maybe Bitcoin, and a launching of a crypto task force this past year. Together, I believe that we're going to have the opportunity to really cement the future of America being a destination for crypto and digital assets moving forward, something for the last 4 years we've remained highly rudderless. First and foremost, American leadership. I believe with this new administration, we can anticipate a wave of innovation, particularly in blockchain products. This comes after losing 2% of market share per year in blockchain development, and this has been over the course of the last half decade. So I want to qualify this for everyone who's paying attention. That's a market share drop from 40% to 29%. The U.S. losing out as a global leader in a space where just years before we had pioneered, and now we're seeing immediate competition coming out of Beijing. But I believe strongly that it's not too late, Mr. Chairman. We have the opportunity to reverse course with this congressional session. So with that, Mr. Yahim, first off, thank you for fighting back against the SEC's regulatory overreach consistently over the past 4 years. I want to talk to you about how do you see the new SEC and CFTC addressing previous conflicts regarding, confusion on where this jurisdiction would lie. Do you see this as a reset opportunity, first and foremost?
Thank you for the question, Congressman. Absolutely, we see this as a reset moment. And again, I think the urgency is very clear if we look around the rest of the world and see what other jurisdictions have done to provide regulatory clarity. Our company was sued on our staking service. We settled. We testified before Congress. The next day, the SEC called and said they were going to sue us again.
That's right.
This has been the past 3 years of our story. While we've engaged other governments and regulators in moving through the legislative regulatory process and providing clear rules of the road. So I think with respect to your question on cooperation, these things are not mutually exclusive. I know there's been discussion of let's wait, let's move stable coins first, let's wait on market structure. We cannot wait any further. And Congress doesn't need to move a market structure bill that solves every single problem in the ecosystem. We are talking about the most basic foundational rules of regulating centralized exchanges. These two agencies can continue to work in tandem while Congress advances the bill in this cycle.
Could not agree more. And clearly we're not waiting in London or in Singapore or in the UAE to move forward on this. We've seen some take it in the wrong direction, I would say the EU, but they've moved out. The United States should not be sitting on its hands as this is developed. I'd like to talk on the national security side here. You're going to be talking to a number of national security professionals here, but over the past few years, we have ceded technological leadership to China, creating a significant risk to our national security and economy, particularly in this area. And that's why in the last Congress, I took lead on the Financial Technology Protection Act, which creates a new working group specifically targeting illicit finance in this area. Stop Americans from Scammers Act, which empowers law enforcement to address and tackle things regarding blockchain tools. And the Clarity Act, which keeps blockchain made here in America, not cede that power out. So I look forward to working with this team as being a leader in this Congress on making sure that these things are enshrined in law, building on EOs that are already moving out. I'd like to talk to you, Mr. Kim, about not only your efforts in pushing this, but how can Congress ensure that we balance our innovation as well as our national security to combat these bad actors while not squelching new technology?
Thank you so much for your question, Congressman. As I mentioned earlier today, countering illicit finance and national security are key priorities, including for CCI and their members. I would encourage additional public-private partnerships. I know at CCI we would love for additional opportunities to engage with all of you and be a resource on any policy issue, including national security. And in order to ensure U.S. leadership and innovation, we need to, again, establish comprehensive frameworks for both market structure and stablecoins, but also ensure national security, to your point, Congressman.
We have a real opportunity here, Mr. Chairman, to make sure this is not only made in America, but that the best practices that drive the resourcing, the security, and the onshore investment can happen right here in main streets from Iowa all the way to New York City. With that, thank you very much, Mr. Chair. Appreciate it and looking forward to stablecoin made in America.
Gentleman yields back. The gentleman from Montana, Mr. Downing, is recognized for 5 minutes.
Thank you, Chairman Steil, and thank you to the witnesses. I represent Montana's 2nd Congressional District, which is rural and sparsely populated. Some of the counties in my district have under 1,000 people. Actually, there's one that's got just over 500 people, so it's very, very sparse. So geographically, we're very large, and blockchain technology is not something that only highly populated and tech-heavy areas should be concerned with. Rural communities can also reap the benefits of this technology, and I'm really excited about it, actually. So I'm just going to start out with Mr. Kim. Can you describe the benefits that digital assets and blockchain technology are bringing to rural communities like my district, and explain why rural users might want to use a blockchain-based financial product over something more traditional?
Thank you so much for this important question, Congressman. As I've mentioned throughout today, blockchain and digital assets allow for more efficient, seamless, low-cost and pricing mechanisms, including for payment purposes. And I think we've talked a lot about today about the potential. What are the use cases? How can this grow? But in order for us to really unlock this potential innovation even more, again, we do need the comprehensive frameworks to ensure the U.S. can lead when it comes to digital asset innovation, including in your districts, Congressman.
Well, thank you. Mr. Fernandez de Ponte, anything to add to that?
Thank you for the question, Congressman. I subscribe to the potential to drive additional flexibility on payments. In many rural areas, there is a scarcity of traditional payment institutions and financial institutions and banking branches. So this ability to be able to have payment instruments that are fast and effective and they can circulate widely, we believe that would benefit substantially residents in rural areas.
Thank you. You know, as several of my colleagues have mentioned, you know, countries around the world are well on their way to establishing regulatory frameworks for digital assets and payment stablecoins. You know, if the United States does not embrace this technology and provide a clear regulatory framework, we will fall behind. Right now, the largest digital asset trading platform and stablecoin issuers are based outside of the United States. I'll go back to Mr. Kim. What are the implications of the U.S. ceding leadership to other countries in digital assets and blockchain technology?
Thank you, Congressman. As I mentioned in my written testimony, it's a race to the top. A lot of other leading jurisdictions are racing to establish regulatory frameworks, and it remains critical and imperative for the U.S. to lead on all of this. Due to the past 4 years of a regulation by enforcement approach, as we've talked about throughout today, responsible, established American companies have had to open offices and pursue licensure elsewhere in other jurisdictions. So time is critical, and Congress, as I've mentioned respectfully, needs to come up with a comprehensive framework to ensure that leadership innovation stays here in the U.S., both for stablecoins, but for many other digital asset companies and intermediaries.
Thank you. Switching gears a little bit, you know, Montana was part of a multi-state enforcement action under NASA against FTX, and I understand the FTX debacle and other hacks and scams in the digital asset ecosystem have made some people skeptical about this technology. You know, there's legitimate concerns that bad actors in the space are not being held accountable and investors are being defrauded. We can preserve the promise of this technology while weeding out the bad actors. I've always said bad actors are bad for business. Nobody wants that. You know, as Montana's former regulator for securities and insurance, I did just that. It was my job to go after fraudsters while making sure Montana remained the place where entrepreneurs came to thrive. So, Mr. Garrison, can you explain why someone who is skeptical of digital assets would want Congress to provide regulatory certainty to the digital asset ecosystem through legislation rather than deferring to the regulators?
It's because the regulators have failed to act that you have situations like FTX, right? So this is an example of fraud not coming from the technology, but from centralized bad actors. Right now, there is no current federal regulator overseeing the spot trading of digital assets, so therefore there's no one for FTX to report into the U.S.
Thank you. Mr. Yahim, anything you want to add to that?
So I think, thank you for the question, Congressman. It's important from a centralized market standpoint. We have clear federal rules. We've tried to navigate this patchwork of multi-state licenses. I think, you know, the states will continue to have an important role to play for consumer protection, as you know from your previous roles. But as with we've seen in the equities and derivatives markets, a clear, unified federal framework is essential in order to protect customers and continue innovation in the United States.
Well, thank you all for being here, and thank you, Mr. Chair. I yield my time.
Gentleman yields back. The gentleman from Florida, Mr. Herodopoulos, is recognized for 5 minutes.
Thank you, Mr. Chairman. I appreciate this. This is always eye-opening as we're getting started in the committee and as a new member. I wanted to pick up where Chairman Hill left off. Mr. Masid, you, in past testimony, have advocated for joint SRO to oversee digital assets as a convenient way to sidestep the questions of whether or not an asset is a security or a commodity. In today's testimony, you're advocating for locating authority to regulate non-security digital asset spot markets at the CFTC through legislation. You were clear that security tokens should be removed from the CFTC's jurisdiction. It seems you punted on any actual factor of what makes a token a security token, only offering vague hand waves that the agency should consult, and there should be provisions to deal with disagreements. So my question, sir, is how does this actually solve the most pressing issues Congress is currently facing if at the end of the day no one knows who's regulating what?
Thank you for the question, Congressman. I would say a couple things. First of all, what I advocated before and I did this with the former Republican chair of the SEC, Jay Clayton, was a joint approach because it is very difficult to draw this line. But having said that, what I would say today is this: if everyone up here thinks it's so easy and Congress should do it, why not let the SEC and the CFTC do it? They are now going to be chaired by Republican appointees. They have the expertise. They only have to get 3 votes of Republican members to adopt something. They don't have to get 60 votes in the Senate. So if it's so easy, it would be a lot faster to have them do it. The thing is, and I have confidence that they can come up with some interesting ideas, but this is a very difficult issue to address. And I'm worried that if Congress tries to do it, we'll undermine our securities markets more than answer any questions.
Appreciate your answer. I believe in democracy, but I appreciate your answer. That said, I wanted to get into the question with Mr. Yahem, with Kraken. Good customer service is always nice. And it seems like when you all attempted to work with the government and in good faith, you're in 200 countries, I think you'd mentioned before, and you're obviously not a fly-by-night company. Could you describe to a new member like myself what it was like to deal with the SEC and other government agencies as you attempted to find common sense regulation?
Congressman, yeah, thank you for the question. And again, with our global business footprint, about 90% of that is North America and Europe. And if you look at Canada, the UK, the EU, we have worked very constructively with the legislatures and the regulators to move regulatory clarity forward. And these jurisdictions are ahead. Regarding our engagement experience with the SEC, we and others, other industry leaders, devoted a significant amount of time and resources to put legal and policy thought to the agency. We were met with lawsuits. And again, we're now turning a new page, and we commend the SEC, the leadership of the Crypto Task Force. This work and the evaluation is important, but it cannot slow down the great work that has been done in Congress. We've seen bipartisan work over the last several congressional cycles. And again, this is not solving every problem in the ecosystem, but statutory authority is needed to put basic rules in place to give the CFTC spot authority and create a comprehensive regime for customers in the United States.
Thank you for your candid answer. With that, Mr. Chairman, thanks again for your leadership on this. I look forward to working with you and the other side of the aisle in solving this issue. I think this is an issue that Congress should address and not leave it to regulators exclusively because administrations change. And I think there might be an important part. So thank you, and I yield back, Mr. Chairman.
The gentleman yields back. The gentleman from North Carolina, Mr. Moore, is recognized for 5 minutes.
Thank you, Mr. Chairman. To our witnesses, again, I want to echo what the other members have said, and thank you for your testimony today. I wish some of the members of the other side were still here, because I remember when our meeting started out, there were some unfortunate comments made by one of the senior members on the other side of the aisle, taking shots at the president and at Elon Musk, and I think that's very unfortunate. I think this should not be a political enterprise in the sense of this testimony today. This is so important. You know, digital assets are not a thing of the future. We're not talking about the Jetsons. We're talking about something that's actually a real thing that roughly 90 million people in this country either invest in or use or both. And the blockchain technology and digital assets hold so much potential to transform our financial system, offering greater efficiency, transparency, and accessibility. And some of the arguments that I would hear from the other side of the aisle was there was worry about fraud, so it couldn't be used. And I'm just before I got here, a small-town lawyer from rural North Carolina, but the best analogy I would know would be someone saying you shouldn't use a $20 bill because there might be a counterfeit one out there somewhere. The reality is, in anything you have, there's going to be fraudsters and criminals who try to come in and abuse the system. And I appreciate what the industry has done to try to deal with it. But I do believe that's very important, Mr. Chairman and members of the committee, that we, as Congress, move forward with a very strong, solid system in place to make sure there are guideposts in place, just like Fit 21 and what the industry has worked on. And
had a series of questions, but I think you all have covered most of that. But I did want to follow up on one thing, Mr. Yakim, who I believe you're an NC State grad, in fact. So you're having a better season than my Tar Heels. So I'll give it to you this year on that one. But I did want to ask this. My understanding is that, and I think Representative Herodopoulos mentioned this just a moment ago, about last year, some of the issues you dealt with Mr. Gensler, and basically it sounds like your company being targeted. And it sounded like a lot of that happened after you brought testimony before the committee. And I'm just curious, how did these actions by them affect your digital asset, your company, but more importantly, the digital asset community and the investment in digital assets? I think it's unfortunate, but I think folks need to hear how that impacted you all.
Thank you for the question, Congressman. And as a Wolfpack fan, you have to believe. We believe and are confident that this Congress is going to get a bill done on market structure. Regarding, our experience, again, we were sued once on one of the programs we offered. Again, there was no clear path to registration for staking. There still is not regulatory clarity. We've seen the UK move forward with legislation on staking. We've seen other jurisdictions do this. We know the United States can do it. And so that's one priority for us. Kraken did testify in Congress, and the next day, we got a phone call, said you're getting sued on another business. I made sure not to wear that same tie for that hearing. But it's important that we move past that. And I know we want to make sure actions of the past administration are held to account, but we are looking forward, and we think there's been a lot of bipartisan support that's necessary to get this bill done in this Congress.
Well, I'm glad to hear that, and to all of the panelists, I really appreciate your expertise and your commitment to this, and look forward to your suggestions as we move forward on this legislation. Mr. Chairman, I yield back.
The gentleman yields back. This concludes our portion of the questions. I'd like to thank our witnesses for their testimony today. Without objection, all members will have 5 legislative days within which to submit additional questions for the witnesses to the chair. The questions will be forwarded to the witnesses for their response. I ask our witnesses to please respond no later than March 31st. The hearing is adjourned.